Now we'll be starting with the importation and exportation of goods. We'll be starting with what? The importation and exportation of goods. Now here, first of all, we'll be discussing about the flow pattern of import. This will make you understand about the entire chapter. Say flow pattern of import. Now, what happens is, this is say flow pattern of import. So the exporter of goods is in US. Exporter of goods is in say US. Now he goes there to the master of the vessel or the steamer agents. He ships the goods and the person in charge of the conveyance, they gave him the document of title to the goods, like bilty or railway receipt is. Similarly, they give here the document of title to the goods to the exporter, that is bill of lading. This bill of lading is given to the exporter. This bill of lading is given to the exporter. Then the exporter gives this negotiable document to the importer here. To the importer here. So that he can clear the goods from the customs. Now, the person in charge, basically they say the person in charge here, they calls on port and they file their arrival report or import report. They file their arrival report or import report. This arrival report or import report is filed by whom? It is filed by the person in charge electronically or the steamer agents. Electronically, the same is filed to the custom authorities. To the custom authorities. Now, these custom authorities, basically they check the same. This arrival report or import report, the same is checked by the custom authority. And then the vessel is granted entry inwards. Then vessel is granted entry inwards. This vessel is granted entry inwards. And this entry inwards is basically permission for unloading of goods. It is permission for unloading of goods. The vessel is granted entry inwards. And what basically entry inwards is? Entry inwards is permission for unloading of the goods. And the goods are unloaded in custody of the port trust authorities. Port trust authorities. They are unloaded in the custody of what? The port trust authorities. Basically, the port trust authorities are the custodians of the cargo. Port trust authorities are whom? The custodians of cargo. Now here what happens is, the importer, he gives the negotiable bill of lading. Negotiable bill of lading to whom? The steamer agents. To steamer agents. He gives the negotiable bill of lading to the steamer agents, and then he obtains what? He obtains the delivery order. He obtains the delivery order. Then here what happens is this importer presents electronically. Presents what? Electronically. What he presents? A bill of entry. As we have already discussed in the first chapter, bill of entry is the basic document for assessment of custom duty. He presents bill of entry. This bill of entry can be for the home consumption, or it can be for the warehousing. It can be for warehousing. This bill of entry is self-assessed or assessed by the department. The custom duty is deposited. The custom duty is deposited, and order for clearance of goods for home consumption is given. What is given is order for clearance of goods for home consumption is given. The importer, along with order plus delivery order, which has been obtained from the master, goes to the port trust authorities. He goes to the port trust authorities and takes the delivery of the goods. He goes to the port trust authorities and takes the delivery of the goods. In case of warehouse goods, what happens is, into bond bill of entry is filed. Triple the amount of duty bond is executed. Triple the amount of duty bond is executed. Bill of entry for warehousing, triple duty bond is executed. Triple duty bond. And then they get what? The order for deposit of goods in warehouse from the custom authorities. These goods are deposited in the custom warehouse. They go with this delivery order and this order, and then the goods are deposited where? Goods are deposited in the custom warehouse. Goods are deposited in custom warehouse. Okay. Goods are deposited where? In custom warehouse. Then, when these goods are, say, deposited in the custom warehouse, they again present, when they want to clear the goods, they have to present ex-bond clearance bill of entry. For clearance of the goods from warehouse, ex-bond clearance bill of entry is presented. Import duty of that date is deposited. Whatever import duty is applicable, that is deposited. Import duty is paid. And they give what? The order for clearance of goods for home consumption. They give an order for clearance of goods for home consumption. So here, let us discuss about the flow pattern of import. Flow pattern of import. So basically, the person in charge of the vessel or any other person, the person in charge of the vessel or any other person notified by the central government, they calls on the port, files the arrival report with the custom authority. They calls on the port and files the arrival report with the custom authority. Okay. The custom authorities then check the documents, grant entry inwards to the vessel. This import manifest or the arrival manifest, the same is checked, and they grant entry inwards to the vessel. Assign import general manifest number to the manifest. Assign IGM number to the manifest, and permit the master of the vessel to land or and unload the cargo. Permit what? The master of the vessel to land and unload the cargo. Okay. Then the vessel discharges the cargo. The vessel discharges the cargo into the custody of the Port Trust Authority. The vessel discharges the cargo into the custody of the Port Trust Authority or any other authority appointed in a particular port to receive the cargo. This vessel is discharging the cargo into the custody of the Port Trust Authority and any other authority which has been appointed in particular port to receive the cargo. Then the importer of the goods, the importer of the goods delivers what? The negotiable bill of lading. Importer of the goods delivers what? The negotiable bill of lading received from the shipper of the goods to the master or the steamer agent of the vessel and obtains a delivery order. The importer of the goods delivers what? The negotiable bill of lading. Negotiable bill of lading received from the shipper of the goods to the master or steamer agent of the vessel, and he obtains the delivery order. Then the importer makes self-assessment. The importer makes self-assessment and thereafter presents a bill of entry. Thereafter presents a bill of entry in prescribed form electronically for clearance of the goods for home consumption or warehouse. So either he can deposit the goods in the custom warehouses or he can clear the goods from the port itself for home consumption. So depending upon the type of, if you want to clear the goods for home consumption, you have to present bill of entry for home consumption. In case if you want to deposit the goods in the warehouse, you have to present bill of entry for the warehousing. Then in case bill of entry for home consumption is presented, bill of entry for home consumption is presented and the proper self-assessment is made by the importer, proper self-assessment is made by the importer, the proper officer shall make an order for clearance of goods for home consumption. Only after he is satisfied that such goods are not prohibited goods and import duty has been paid. Okay. Then in case bill of entry for warehousing is presented, the importer has to execute what? Triple the amount of duty bond. And when he executes triple duty bond, he gets an order for deposit of goods in the warehouse. That can be public warehouse, that can be private warehouse, that can be special warehouse. On showing the customs clearance to the port trust authorities or any other custodian of the cargo, the importer takes delivery of the cargo for home consumption or for deposit in warehouse. Okay. And for removal of goods from warehouse, the importer files an ex-bond clearance bill of entry. Importer files what? An ex-bond clearance bill of entry for clearance of the warehouse goods. And after payment of custom duty so redetermined and other charges payable to the warehouse keeper, including rent and interest, the goods are removed for home consumption. So this was basically the flow pattern. Now we'll be starting with the provisions relating to the conveyances which are carrying the imported goods and the export goods. The provisions relating to the conveyances carrying imported goods or the export goods. Now we'll be discussing section 29. Section 29 is arrival of vessels and aircrafts in India. Section 29, it is dealing with the provisions relating to arrival of vessels or aircraft in India. So here basically the person in charge of vessel or aircraft, who is entering India from any place outside India, shall not permit the vessel or aircraft to call or land. They will not permit the vessel or aircraft to call or land for the first time after arrival in India. For the first time, after arrival in India. Or at any time when they are carrying passengers or cargo brought in that vessel or aircraft. Or at any time when they are, carrying passengers or cargo brought in that vessel or aircraft at any place other than what? The customs port or customs airport, as the case may be, unless permitted by the board. Okay. So when they are carrying the passengers or cargo, after first time, then also they have to call or land at the custom port or custom airport. But the above provisions shall not apply in relation to any vessel or aircraft which is compelled by accident, stress of weather, or other unavoidable cause, which is compelled by, say, accident, stress of weather, or by, say, other unavoidable cause to call or land, at a place other than custom port or custom airport. But the person in charge of vessel or aircraft, they shall immediately report the arrival of the vessel. They'll immediately report the arrival of the vessel or landing of the aircraft to the nearest custom officer or officer in charge of police station. They will report the arrival of the vessel or landing of the aircraft to the nearest custom officer or officer in charge of police station, and shall on demand produce to him the logbook belonging to the vessel or aircraft. On demand, they will produce to him the logbook which is belonging to the vessel or aircraft. And they will not permit, they shall not, without the consent of the such officer, permit any goods carried in the vessel or aircraft to be unloaded from, or any of the crew or passengers to depart from the immediate vicinity of the vessel or aircraft. They will not permit any goods carried in the vessel or the aircraft to be unloaded from, or any of the crew or passengers to depart from the vicinity of the vessel or aircraft, and they will comply with directions given by any such officer with respect to any such goods. And on no passenger or member of the crew shall, without the consent of any such officer, leave the immediate vicinity of the vessel or aircraft. And no passenger or member of the crew shall, without the vicinity of the officer, leave the immediate without the permission of the officer, basically, leave the vicinity of the vessel or aircraft. Then, however, nothing contained in this section shall prohibit the departure of any crew or passenger from the vicinity or removal of goods from the vessel or aircraft, where the departure or removal is necessary for reasons of health, safety, preservation of, say, life or property. Now, section 30 is delivery of arrival manifest or import manifest or import report. Section 30 is delivery of arrival manifest or import manifest or, say, import report. Now, section 30 is delivery of arrival manifest or import report. So, basically, according to section 224 of the Customs Act 1962, arrival manifest or import report means what? The manifest or report as required to be delivered under section 30 of the Customs Act. Arrival manifest or import report means what? The manifest or report as required to be delivered under section 30 of the Customs Act. That is the arrival manifest or import report. And here, the person in charge of the conveyance carrying the imported goods or, say, export goods has to present, say, the arrival manifest or import manifest. In case of vessel or aircraft, it is import manifest or arrival manifest. That is in case of vessel or, say, aircraft. And in case of vehicle, it is import report. In case of vessel or aircraft, it is arrival manifest or import manifest. Same is to be presented electronically. Okay. prior to the arrival of the manifest or prior to the arrival of the vessel or aircraft. And in case of vehicle, within 12 hours of the arrival of the vehicle. In case of vehicle, within 12 hours of the arrival of the vehicle. Within 12 hours of the arrival of the vehicle. So, here the person in charge of the conveyance carrying the imported goods or export goods has to present the arrival manifest or import manifest in case of vessel or aircraft, or say import report in case of vehicle in prescribed form. The central government can specify persons who can furnish the arrival manifest or import report in case of vessel or aircraft, that is the steamer agents have been notified. Steamer agents have been notified. Okay. So, the arrival manifest or import report has to be delivered within the following time limits. That is what has to be delivered in case of say vessel or aircraft. It is electronically it is to be delivered prior to the arrival of the vessel or aircraft. And in case of vehicle, it is to be delivered within say 12 hours of the arrival of the vehicle. Within say 12 hours of the arrival of the vehicle. And here the principal commissioner or commissioner of customs, in case where electronic filing is not feasible, they can they can allow the same to be delivered in physical form also. Then if you do not present the import manifest or arrival manifest or import report, if you do not present the import manifest or arrival manifest or import report within the specified time period, and there is no sufficient cause for such delay, then penalty can be levied not exceeding rupees say 50,000. So here, in case the arrival manifest or import manifest or import report is not presented within the specified time limit, and if the proper officer is satisfied that there was no sufficient cause for such delay, then in that particular circumstance, the person in charge or any other person specified above who has caused such delay shall be liable to penalty. They will be liable to penalty not exceeding rupees say 50,000. Then, if the proper officer is satisfied that the arrival manifest or import manifest or report is in any way incorrect or incomplete, it is in any way incorrect or incomplete, and there was no fraudulent intention, he may permit the same to be amended or supplemented. He may permit the same to be say amended or supplemented, and the person delivering the arrival manifest or import report shall at the foot thereof make and subscribe to a declaration as to the truth of the contents. The person delivering the arrival manifest or import report, they at the foot thereof they will have to make and subscribe as to declaration as to the truth of the contents. Then section 30A is what? Passenger and crew arrival manifest and passenger name record information. Passenger and crew arrival manifest, or say passenger name record information. So here basically the person in charge of conveyance that enters India from any place outside India, or any other person as may be specified by central government by notification in the official gazette, shall deliver to the proper officer the passenger and crew arrival manifest. The passenger or crew arrival manifest before the arrival before the arrival of vessel or aircraft. Okay? And in case of vehicle upon its arrival, they have to give the passenger and crew arrival manifest and passenger name record information. So basically, what is the passenger name record information? It is the records prepared by the operator of the aircraft or vessel or vehicle or the authorized agent for each journey which has been booked by on behalf of the passenger. Then penalty is levied not exceeding rupees 50,000. So here where the passenger and crew arrival manifest or passenger name record information or any part thereof is not delivered to the proper officer within the prescribed time. And if the proper officer is satisfied there was no sufficient cause for such delay, the person in charge or other person, which has been other specified person, shall be liable to penalty not exceeding 50,000, as may be say prescribed. Then section 31 is imported goods not to be unloaded from vessel until entry inwards granted. So basically here entry inwards is permission for unloading of goods. Entry inwards is permission for say unloading of goods. So here the master of the vessel shall not permit the unloading of any imported goods or loading of say any export goods also, no, unloading of any imported goods. Similarly, in case of export, it is entry outwards. They will not permit the unloading of the imported goods unless the proper officer grants an entry inwards to the vessel. What is why the date of entry inwards is important? Because we have to find out the custom duty rate of the entry inwards or the arrival of the vessel, which I will say later. Then no such order shall be given until an arrival manifest or import manifest has been delivered or the proper officer is satisfied that there was a sufficient cause for not delivering it. Then the provisions of this section shall not apply to unloading of baggage accompanying the passenger or the member of crew, mail bags, animals, perishable goods and hazardous goods. Now section 35 is boat note regulations, that is restriction on goods being waterborne. Section 35 is restriction on goods being waterborne. Basically say if a vessel does not get berth at port, it is anchored in mid-sea. And the goods are unloaded from vessel and brought at port through small boats and lighters. So here basically we have to have a control over these boats. For this purpose, boat note regulations have been framed. So in case the vessel arriving at the port does not get berth, then the import cargo is to be taken from ship to the shore and export cargo is taken from shore to the ship in boats. And here no imported goods shall be waterborne from being landed from any vessel, and no export goods which are not accompanied by shipping bill shall be waterborne for being shipped unless the goods are accompanied by boat note in the prescribed form. For this, boat note regulations have been framed. And the board may give general permission and the proper officer may in a particular case give special permission. for exemption from these board notes. So in case of export goods, if the goods are accompanied by shipping bill, there is no requirement for production of boat note. For production of boat note. Then section 32, these in the name itself of the statutory provision, section 32, all these sections, the name itself contains all the provisions. So what they say is imported goods not to be unloaded unless mentioned in arrival manifest or import manifest or import report. Imported goods not to be unloaded unless mentioned in arrival manifest or import manifest or import report. So basically no imported goods required to be mentioned under the regulations in an arrival manifest or import manifest or import report shall, except with the permission of the proper officer, be unloaded at any customs station unless they are specified in such manifest or report for being unloaded at that customs station. Then section 33 is what? Unloading and loading of goods at approved places only. Section 33 is what? Loading and unloading at approved places only. So except with the permission of the proper officer. Except with the permission of the proper officer, no imported goods shall be unloaded. No imported goods shall be unloaded, and no export goods shall be loaded, and no export goods shall be loaded at any place other than the place approved under clause A of section 8 for unloading and loading of goods. So loading and unloading will be at approved places only. Then, but natural, supervision of the proper officer will be required. The imported goods shall not be unloaded from. Imported goods shall not be unloaded from, or export goods shall not be loaded on any conveyance. Imported goods shall not be unloaded from, and export goods shall not be loaded on any conveyance except under the supervision of the proper officer. So here, supervision of the proper officer will be required. The board may by notification in the official gazette give general permission. The board may by notification in the official gazette give general permission, and the proper officer in a particular case gives special permission for any goods or say class of goods to be unloaded or loaded without the supervision of the proper officer. Then section 36 is restriction on unloading and loading of goods on holidays, etc. Restriction on unloading and loading of goods on holidays, etc. No imported goods shall be unloaded from, and no export goods shall be loaded on any conveyance or any on Sunday, on any Sunday or any holiday which has been observed by the customs department, or any other day after working hours, or any other day say after working hours. And basically, if they have to be unloaded on Sundays or holidays observed by the public department, government department, or say on after working hours, we have to give a prescribed notice for the same, and we have to make the payment, prescribed fees. Then section 37 is say power to board conveyances. That is, the proper officer may at any time, the proper officer may at any time board any conveyance carrying the imported goods or export goods, and they may remain on such conveyance for such period as he considers necessary. Proper officer may board any conveyance, and he may remain on conveyance carrying the imported goods or export goods, and they may remain on the conveyance as for such period as they may think fit. And section 38 is power to ask questions, to require production of documents and ask questions. That is, for the purpose of carrying out the provisions of the Act, the proper officer may require the person in charge of conveyance or animal carrying the imported goods or export goods to produce any document and to answer any questions and thereupon the person shall produce such documents and answer the questions which has been, say, put to him. So this is what about, we have discussed about the provisions relating to, general provisions relating to the vessels, conveyances carrying the import. Now let us discuss section 45. Section 45 is basically restriction on custody and removal of imported goods. Section 45 is restriction on, say, custody and removal of the imported goods. So as we have already seen, when the goods will be unloaded in the custody of the port trust authority, they are unloaded. Where they are unloaded? In the custody of the port trust authority. So basically the custodians of the cargo, they are the port trust authorities, and in their custody the goods are unloaded. They have to keep the proper record of the goods, and they will not permit any person to remove the goods until and unless they say see the order from the proper officer of customs relating to the clearance. So custodians are the, these port trust authorities, but here the control will be of the proper officer of customs. Until and unless the proper officer of customs permit, the goods cannot be removed from their custody. And in case we have already seen in pilferage also, the provisions of 45(3), in case when any pilferage takes place in the custody of the port trust authority, then importer is not required to pay the duty. But who is required to pay the duty? It is the custodian of the cargo. They will be required to pay the duty. The duty will be applicable of the date of the presentation of the arrival manifest or import report for the arrival of the conveyance in which the said goods were carried. So basically all the imported goods that are unloaded in the custody, in the custom area, shall remain in the custody of such person as may be approved by the principal commissioner or commissioner of customs. They will remain in the custody of the custodians of the cargo. So all the imported goods that are unloaded in the custom area, they will remain in the custody of such person as may be approved by the principal commissioner or commissioner until they are cleared for, say, home consumption, or they are cleared for warehousing, or they have been, say, transshipped. Until they have been cleared for home consumption, or they are transshipped, or they are cleared to another warehouse. Now here, the custodian of the cargo, he will maintain what? The proper records of the goods. So the person having custody of any imported goods in the custom area, the person having custody of any imported goods in a custom area shall keep a record of such goods and send a copy thereof to the proper officer. He will keep a record of such goods and will send a copy thereof to the proper officer, and he shall not permit such goods to be removed from the custom area. He will not permit the goods to be removed from the custom area or otherwise dealt with, except under and in accordance with the permission in writing of the proper officer, or in such manner, say, as may be prescribed. So here basically the custodian will keep the proper record, control will be of the proper officer. He will not allow any person to remove the goods from his custody. So basically section 45(3) provides that if any imported goods are pilfered, after unloading thereof in the custom area, if the goods are pilfered after unloading thereof in the custom area, pilferage is there, then the port trust authority, that is the custodians, they will be liable to pay the duty on such goods. The port trust authorities will be liable to pay duty on such goods at a rate prevalent on the date of delivery of arrival manifest or import report or import manifest, prevalent on the date of delivery of the arrival manifest or import manifest or import report to the proper officer for arrival of the conveyance in which the said goods were carried. They will be liable to pay the duty. And basically the custodians of the cargo, they will be liable to pay the duty. Then when these goods have been unloaded in the custody of the port trust authority, now comes the importer's picture. Now section 46 is very, very important section. This is very, very, very important section. Now here, section 46, it is dealing with what? Entry of goods on importation. Section 46, it is dealing with what? Entry of goods on the importation. Now here, bill of entry is required to be presented electronically to the importer, to the custom authority, for clearance of imported goods. So here, who is required to present the bill of entry? It is the importer. It is the importer of the goods other than the goods intended for transit or transshipment. So the goods can be, transited to a place outside India or to a custom station in India, or similarly, they can be unloaded from one vessel and loaded in another vessel for transshipment to a place in India or outside India. So other than goods intended for transit or transshipment, the importer of any goods, he will make an entry thereof, by presenting electronically on the customs automated system a bill of entry in prescribed form, in such form and manner as may prescribed. A bill of entry in prescribed form, either for home consumption and for warehousing. For this purpose, basically, they have framed bill of entry, electronic integrated declaration and paperless regulations 2018. Then in case if electronic filing is not feasible, then the bill of entry can be presented. The same can be presented in physical form also. So in case the electronic filing is not feasible, the bill of entry can be presented in a physical form. Okay, so here the principal commissioner or the commissioner of customs. The principal commissioner or the commissioner of customs may, in cases where it is not feasible to make entry by presenting bill of entry electronically on the customs automated system, allow an entry to be presented in any other manner. So manual submission of bill of entry will also be there. Then the goods, they may be cleared either for home consumption from the port, or they may be deposited in the warehouse, and from where the goods are to be cleared. Now basically bill of entry is presented in 3 different forms. It can be a bill of entry for clearance for home consumption from the port. It can be a bill of entry for, say, warehousing, and it can be a bill of entry for clearance for home consumption export. So here, form 1, that is white, that is for home consumption. Form 2, that is yellow, that is for warehousing, into bound bill of entry, for warehousing, into bound bill of entry. And form 3, general, that is green, that is for ex-bound clearance bill of entry for home consumption, for clearance of goods from custom warehouse. Then basically when bill of entry is filed electronically, the same is to be filed in 4 copies. The bill of entry is filed electronically in 4 copies. Number 1 is what? The original, that is meant for the custom authorities for assessment and collection of custom duty. Original is meant for the custom authorities for what? Assessment and collection of the custom duty. Then duplicate, that is intended as for the custodians of the cargo to release the cargo. Duplicate is for the custodians of the cargo to release the cargo. Triplicate is for the record of the importer. And 4th copy, it is to be presented to the Reserve Bank of India for clearance of the, for making remittance of the export goods. So for the imported goods. So when bill of entry is filed electronically, the same will be presented in 4 copies. Original, that is meant for the custom authorities. Original is meant for the custom authorities for assessment and collection of duty. Then the duplicate, that is intended as an authority to the custodian of the cargo for release of the cargo to the importer from his custody. Triplicate as a copy of a record for the importer. Triplicate as a copy for record of the importer. And 4th copy, the same is to be presented to Bank or Reserve Bank of India for the purpose of making remittance of the imported goods. And here, the importer is required to declare in the bill of entry, amongst other things, the particulars of packages, description of the goods, tariff classification, valuation, so that the duty can be, say, properly assessed. Now, what may happen that, say, we have imported goods A, goods B, goods C, goods D. And at present, we do not know which goods have arrived at the port. So here we can present in the presence of the officer prior to entry, prior to making the bill of entry, we can examine the goods so that we can present the bill of entry, or we may request them to deposit the goods in public warehouse. Without warehousing the same. So here the importer is required to declare, basically, if the importer makes and subscribes to a declaration, the importer makes and subscribes to a declaration before the proper officer to the effect that he is unable for the want of full information. He is unable for the want of full information to furnish all the particulars of the goods, then the proper officer may, pending production of such information, previous to the entry thereof, that is prior to the presentation of bill of entry, they may allow to examine the goods in presence of the officer of customs. They may allow to examine the goods in the presence of the officer of customs, or they may allow to deposit the goods in public warehouse appointed under section 57 without warehousing the same. Examine the goods in the presence of the officer, deposit the goods in the public warehouse appointed under 57 without warehousing the same. So this is also known as, here also this is basically we are warehousing, but prior to the presentation of the bill of entry. We are warehousing, but prior to the presentation of the bill of entry. Then the bill of entry shall include all the goods mentioned in the bill of lading or other receipt given by the courier to the consignor, except as otherwise permitted by the proper officer. A bill of entry shall include what? All the goods mentioned in the bill of lading or other receipt given by the courier to the consignor, except otherwise permitted by the proper officer. Now, what is the time limit for presentation of bill of entry? Basically, the bill of entry is to be presented before the end of the day preceding the day of the arrival of the conveyance in which the goods were carried. So before the end of the day preceding the day of the arrival of the conveyance. So here the importer, while presenting a bill of entry, shall make and subscribe to a declaration as to the truth of the contents of such bill of entry, and shall in support of such declaration produce the proper officer, if any, and such other documents relating to the imported goods as may be say prescribed. So what is the time limit? Basically, the importer shall present the bill of entry. The importer shall present the bill of entry before the end of the day, including the holidays, preceding the day on which of the arrival of the aircraft or vessel or vehicle. So if the vessel or aircraft or vehicle is expected to arrive say on 25th of January, it is to be presented up to 24th of January. Okay. So the importer shall present a bill of entry before the end of the day, including the holidays, preceding the day on which the arrival of in which the aircraft or vessel or vehicle carrying the goods arrives at the customs station, at which the goods are to be cleared for home consumption or warehousing. However, the board may, in such cases, as it may deem fit, prescribe different time limits for presentation of bill of entry, which shall not be later than what? The end of the day, including end of the day of such arrival. Then a bill of entry may be presented at any time. A bill of entry may be presented at any time not exceeding 30 days prior to the expected arrival of the conveyance. And here, in case the conveyance do not arrive within 30 days, if the conveyance do not arrive within 30 days, then the bill of entry shall be deemed to be cancelled. So where a bill of entry is not presented within the time so specified, and proper officer is satisfied that there was no sufficient cause for such delay, the importer shall pay such charges for the late presentation of bill of entry as may be prescribed. The importer will pay charges for the late presentation of bill of entry as may be say prescribed. Then the importer, while presenting the bill of entry, they will make and subscribe to a declaration as to the truth of the contents, and the importer who presents the bill of entry shall ensure the following, namely, the accuracy and the completeness of the information given therein, the authenticity and validity of any document supporting it, and compliance with the restrictions or prohibitions, if any, related to the goods under the Act or under any other law for the time being in force. Then, even if the goods have been made exempt from tax, even if the goods have been exempt from duty, then also the bill of entry is required to be say presented. Now here, bill of entry, electronic integrated declaration and paperless processing regulations 2018 have been framed. They have framed what? Bill of entry, electronic integrated declaration and paperless regulations 2018 have been framed. So basically these regulations may be called the bill of entry, electronic integrated declaration and paperless processing regulations 2018. These regulations may be called say bill of entry, electronic integrated declaration and paperless processing regulations 2018. They shall apply to import of goods through all the customs station where Indian customs electronic data interchange system is in operation. So basically they will apply to all the import of goods through all customs station where ICE DIS is in operation. ICE DIS, the same is in operation. Okay. And they will come into force on 11th of May 2018. Now here, the authorized person who is the authorized person? He is an importer or the custom house broker. They shall enter electronic integrated declaration and the supporting documents under his affixing under his digital signature on the ICE gate, that is the common portal, that is the ICE gate. Okay, and he may also get the electronic integrated declaration made on the common portal along with the supporting documents by availing the services of service center. Who is the authorized person? It is the importer or his now electronic data integrated declaration say means particulars relating to imported goods that are entered in Indian customs electronic data interchange system. Then supporting documents means the documents in the electronic form or otherwise which are relevant to the assessment of the imported goods under section 17 and 46. Now here, what is the procedure for filing bill of entry? What is the procedure for filing, say, bill of entry? Here, the bill of entry is to be presented. See, if the same is to be presented in a custom port, the same is to be presented in a custom port. As we have seen, it is to be presented before one day. That is up to the end of the day, before preceding the day when the vessel is expected to arrive. That is before the end of the day, including holidays. Before the end of the day, including holidays, preceding the day on which the vessel carrying the goods arrives at the customs station. Before the end of the day, including holidays, preceding the day on which the vessel carrying the goods arrives at the custom port. Or say, before the end of the day, including say holidays of the said arrival of the vessel, where the goods are consigned from any of the countries, basically it is Bangladesh, Maldives, Myanmar, Pakistan, Sri Lanka. It is Bangladesh, Maldives, Myanmar, Pakistan, Sri Lanka. Before the end of the day, including holidays of the said arrival of the vessel, where the goods are consigned from any of the countries mentioned below. That is the neighboring countries. In custom airport also, before the end of the day, including holidays, before the end of the day, including holidays, of the arrival of the aircraft carrying the goods at the custom port. Before the end of the day, including holidays, of the arrival of the aircraft carrying the goods at the custom airport. Similarly, in case of inland container depot, before the end of the day, including say holidays, before the end of the day, including holidays, preceding the day on which the vehicle, which includes train, carrying what? The goods, arrives at the ICD. In case of ICD, it is also before the end of the day, including the holidays, preceding the day in which the vehicle carrying the goods arrives at the inland container depot. But at a custom airport and land custom station. At custom airport and say land custom station. At custom airport and say land custom station. It should be before the end of the day, including holidays, of the arrival of the vehicle, which includes train carrying the goods at the land custom station. That is same for ICDs, and this port is also same, but for neighboring ports, it is like the custom port or say this. Okay. Now the bill of entry shall be deemed to have been filed and self-assessment completed when after entry of the electronic integrated declaration of the common portal or by way of data entry through service, a bill of entry number is generated. A bill of entry number is generated by ICDIS. When a bill of entry number is generated by ICEDIS. And a self-assessed copy of bill of entry may be electronically transmitted to authorized person or printed out at the service center. Now, charges for late presentation of bill of entry. Charges for late presentation of bill of entry. It is what? Rupees 5,000 per day for initial 3 days. 5,000 per day for initial 3 days, and then 10,000 per day subsequently, subject to maximum of rupees, or maximum of the duty amount. It cannot exceed what? The duty amount. The same cannot exceed the duty amount. So where a bill of entry is not filed within the time specified above, and the proper officer of customs is satisfied that there was no sufficient cause for such delay. There was no sufficient cause for the delay. The importer shall be liable to pay charges for late presentation of bill of entry at rate of rupees 5,000 per day for initial 3 days. At rate of 5,000 per day for initial 3 days of default, and at rate of 10,000 per day for each day of the default thereafter. And when the proper officer is satisfied with the reasons for delay, he may waive off the charges referred to in second proviso of the Customs Act 1962. So he will waive off these charges. Okay. Then the late presentation charges, the same will not exceed the duty payable in respect of that particular bill of entry. Late presentation charges will not exceed the shall not exceed the duty payable in respect of particular bill of entry, and with duty or any other charges in respect of any bill of entry are not payable for reason like exemption or otherwise, the late presentation charges shall not exceed rupees say 50,000. Late presentation charges will not exceed say 50,000, because in case the bill of entry with the duty amount is nil, then the same will be, it will not exceed what? The 50,000. Now here bill of entry basically means the electronic integrated declaration accepted and a unique number generated and assigned to that particular bill of entry by ICDIS and includes electronic records or printout. And IceGate means the customs automated system of CBIs. That is, the common portal. Then after completion of the assessment and order permitting, say, clearance of the goods for home consumption will be given, and the same will be given electronically to the authorized person, the custodians, and any other person who has been designated by the authorized person. This bill of entry and the supporting documents which have been presented by us, the same must be retained for a period of say 5 years. So authorized person shall retain for a period of say 5 years from the date of presentation of bill of entry, the assessed copy of bill of entry, digital or otherwise, and all supporting documents in original, which were used or relied upon by him in submitting the electronic integrated declaration, and shall produce them before customs in connection with any action or say proceedings under the Act, under any other law for the time being in force. Then authenticated copy of bill of entry may be generated at the request of the authorized person. Authenticated copy of bill of entry may be generated at the request of the authorized person if the possession of the said copy is required by him for the compliance of the provisions of law for the time being in force. Then penalty, authorized person contravenes any of the provisions of these regulations or fails to comply with the provisions of these regulations, they shall be liable to penalty which may extend to rupees say 50,000. So fundamentally this is, these regulations have been framed. Then let us discuss one question. XYZ Limited imported goods through vessel which arrived at custom port on 1st of May. The company presented bill of entry for home consumption in ICDIS on 6th of May. So same is to be presented up to what? It was to be presented up to 31st of April. And it has been presented on 6th of May. Delay days is 6 days. Delay days is 6 days. Now what are the charges? 30th April. Delay days is 6 days. Charges will be 5,000 into 3 plus 10,000 into 3. It is 15,000 and 30,000. What 45,000. The charges cannot exceed the duty amount. Charges cannot exceed the duty amount. Now section 47 is clearance of goods for home consumption. So basically, when you have presented a bill of entry for home consumption, you have made payment of duty as per the rules which have been framed in this regard, then the proper officer will give an order for clearance of goods for home consumption. So basically, if the goods are not prohibited goods and import duty and other charges have been paid. So here basically section 47 provides for clearance of goods for home consumption. So where the proper officer is satisfied that any goods entered for home consumption, that is bill of entry for home consumption, has been presented and they are not prohibited goods, and the importer has paid the import duty, if any, assessed thereon, and charges payable under the Act in respect of the same, then the proper officer will make an order permitting clearance of goods for home consumption. Basically, this order is to be made electronically through customs automated system, okay, on the basis of risk evaluation through appropriate selection criteria. Now, for certain classes of importers, you know, deferred payment option have been provided by the government. So there is changes in the deferred payment duty rules also this time. So the central government may by notification in the official gazette exempt or may permit basically certain classes of importers to make deferred payment of the said duty or any charges in such manner as may be provided by the rules. So here the government may by notification in the official gazette, they will permit certain classes of importers to make deferred payment of duty or any charges in respect in the manner as may be provided by the rules. Basically, who have been notified? That is, one is the authorized economic operator, Tier 1, Tier 2, Tier 3, authorized public undertaking, as well as eligible manufacturer exporters, as well as eligible manufacturer importers, they have been, say, notified. So basically, to make deferred payment, the government has notified the following importers to make deferred payment of duty, that is importers certified under authorized economic operator program as AEO Tier 2 and AEO Tier 3, authorized public undertakings, they have been notified, and eligible manufacturer importer has been notified. However, eligible manufacturer importer shall be permitted to make deferred payment of import duty up to 31st of March 2028. Authorized economic operator is certified by Director General of Performance Management under Central Board of Indirect Taxes and Customs, and eligible manufacturer importer means a manufacturer importer, basically he is importing for the purpose of manufacturing activity. Beside this, the government may by notification, they may specify class or classes of importers who will pay the duty electronically One is the importers which are registered under authorized economic operators. Authorized economic operator. They are authorized economic operator. And another one is importers who are paying custom duty of rupees 10,000 or more per bill of entry. Importers who are paying custom duty of rupees 10,000 or more per bill of entry. Now, they have to make the payment of duty, and in case the duty is not paid as per the date specified, they will be liable to pay interest at a rate of 15% per annum on the delayed payment of duty. So, importers shall pay the import duty. In case of self-assessment, if self-assessment is there, in that particular circumstance, on the date of presentation of the bill of entry, you will be required to pay the duty on the date of presentation of bill of entry. Then, in other case, when the bill of entry is returned to you within a period of 1 day, okay, whenever it is returned, from the end of that day, within 1 day, you will be required to pay the duty. Okay, within 1 day, excluding holidays, from the date on which the bill of entry is returned to him by the proper officer for payment of duty. So, in case of assessment, reassessment, or say provisional assessment. In case of assessment, reassessment, or provisional assessment, within say 1 day, excluding holidays, from the date on which the bill of entry is returned to him by the proper officer for payment of duty. And in case of deferred payment, from such due date as may be specified by the rules made in this behalf. In case of deferred payment, from such due date as may be specified by the rules which have been made in this regard. Okay. In case the importer does not make the payment of duty, within the time limit, he will be liable to pay interest at a rate of 15% per annum. And the Central Board of Indirect Taxes and Customs have a power to waive the interest also. So, now here basically we have seen deferred payment of import duty rules 2016 has been made. That means what? Clear first. Pay later. That is deferred payment of import duty rules 2016. These has been amended. So, basically these rules may be called deferred payment of import duty rules 2016, and they have come into force with effect from 16th of 11 2016. Now, here who are persons who are eligible? We have already seen that importers who are certified under authorized economic operator, AEO tier 2, AEO tier 3. So, importers certified under authorized economic operator as AEO tier 2, AEO tier 3, authorized public undertakings, and eligible manufacturer importer. Now, this eligible manufacturer importer will also be allowed to make deferred payment of duty. Now, here for whom these rules are applicable, these rules shall apply to eligible importer who have been notified under proviso to section 47(1) of the Act. These are eligible importers, authorized economic operator tier 2 program, tier 3 program, authorized public undertaking, and eligible manufacturer importer. Now, earlier we will have to make payment on say bi-monthly basis. Now this has been changed. So, here the eligible importer shall pay the duty by the date specified hereunder, inclusive the period, excluding holidays as mentioned in 47(2) of the Act. So, if the bill of entry is returned from first day of the month to the last day of the month except for the month of ending on March. So, here say if it is say if the bill of entry is returned from April 1st to 30th of April, for payment of duty, this bill of entry is returned. So, you will be required to make the payment on the first day of the next month, that is 1st of May. But if it is returned from 1st of March to 31st of March, for the month ending 31st March, you will be required to make the payment up to what? 31st of March. So here these changes have been made. So the eligible importer shall pay the duty by the dates, these are the dates, for goods corresponding to bill of entry returned for payment from first day to till the last day of any month other than March. It will be first day of the following month. And from first day till 31st day of the March, it will be what? 31st of March. And where the central government considers it necessary and expedient, it may under exceptional circumstances, and for reasons to be recorded in writing, allow payment to be made on a different date. Here, basically, you will be required to pay the duty electronically, but the AC or DC, for reasons to be recorded in writing, may allow payment of duty by any other mode other than electronic payment. When this facility will not be available, here the eligible importer who fails to pay the duty in full, by due date more than once in a period of 3 consecutive months, he will not be permitted to make deferred payment. Remember, if there is a default and it is more than once in consecutive 3 months, then in that particular circumstance, you won't be allowed to make deferred payment till you pay the duty along with the interest. Your dues are not paid up till that time, this deferred payment facility will not be restored. So facility of deferred payment shall not be restored. This is important. Remember, facility for deferred payment shall not be restored unless the eligible importer has paid the duty along with the interest. He has paid the duty along with interest. The eligible importer shall be permitted to make deferred payment if he has paid the duty for a bill of entry as per the due dates and paid the differential duty for the same bill of entry. For the same bill of entry along with interest on account of reassessment within 1 day, excluding holidays. Basically, if the goods have not been declared, or they have not been assessed as per the provisions of the Act, then in that particular circumstance, you will not be getting the benefit of deferred payment. So, nothing contained in these rules shall apply to goods which have not been assessed or not declared, by the importer in entry made under this Act. So here, basically, a bill of entry was presented on 4th of August. The vessel carrying the goods arrived on 11th of August. Entry inwards was granted on 14th of August. And bill of entry was assessed on that date and was also returned on the same date. So on 14th of August, the bill of entry was returned to you. You will be required to make the payment next day. But next day is, say, holiday. 15th of August says what? Holiday. So on that date, payment could not be made. That is excluded holiday. So your due date is 16th of August. Your due date becomes now 16th of August. Then they say that duty amounting to 14,60,000 was paid on 19th of August. So you are required to make the payment on 16th, but you made the payment on 19th of August. So you will be liable to pay interest for 17, 18, 19 for a period of 3 days. If you pay up to 16th, you won't be required to pay any interest. But since you have delayed, 3 days interest will be there of the duty amount at rate of 15% per annum. Okay, 15% per annum. So your interest will be how much? Interest will be 1460 into 15% into 3 divided by 365. 1800 rupees is the interest. So 1800 interest is there. Now there are provisions relating to faceless assessment. So basically to avoid corruption. The department as government has initiated with a faceless assessment. Say if we are presenting a bill of entry at a particular port, the custom officer of that port will not be making the assessment. He won't be knowing which custom officer will be making the assessment. There is anonymity in there. So basically for transparency purposes, here faceless assessment provisions have been introduced, as in case of income tax. Here also faceless assessment provisions are there. So basically what faceless assessment is? Faceless assessment is a major customs reform. Faceless assessment is a major customs reform where a bill of entry that is identified for scrutiny. Basically it's a non-facilitated bill of entry. Bill of entry identified for scrutiny, that is non-facilitated bill of entry, is assigned to the assessing officer. Its bill of entry is assigned to the AO, that is assessing person, who is physically located at a custom station. These located at a custom station, but that custom station is not port of importation. That custom station is not a port of importation. So if you are importing at Mumbai port and the bill of entry assigned to the officer posted where? At Visakhapatnam port, that will go with a faceless assessment. He is also not knowing whose bill of entry basically is assessing. Is assigned to a AO who is physically located at a custom station, which is not the port of import in custom automated system. It separates assessment process. Basically, it separates what? It separates the assessment process from physical location of port of import. From physical location of port of import using a technology platform. Faceless assessment is also known as virtual assessment, or we can say it's an anonymized assessment using technology platform to separate custom assessment process from physical location of custom officer at the port of arrival. Basically here intention is to be, it will ensure objective, free, fair and just assessment. For an importer's perspective, basically there nothing will change, but will be changing. There nothing will change from theoretical point of view. Otherwise there is so, we can say money matters a lot. So from importer's perspective, there is no changes to the process of bill of entry. He will continue to file his documentation, including bill of entry and supporting document at iSkate portal. So basically, what are the key objectives of the faceless assessment? That is anonymity in the assessment for reduced physical interface between trade and customs. Anonymity in the assessment. Then speedier customs clearances. Speedier customs clearances through efficient utilization of manpower. Greater uniformity of assessment across locations. Greater uniformity of assessment across locations. And promoting sector specific and functional specialization in assessment. Okay. Now here, what is the procedure? Basically for section 48 is dealing with what? In case the goods have not been cleared for home consumption, they are not warehoused or they are not transshipped within 30 days of unloading and extension has not been obtained for the same, then in that particular circumstance, the custodians, with the approval of the proper officer, they will sell the goods. Who will sell? It's not the proper officer will not sell. It is the custodians will sell with the approval of whom? The proper officer. So that is 48. That is procedure in case the goods are not cleared, warehoused or transshipped within 30 days after unloading. So if any goods brought into India, if any goods brought into India from a place outside India, they are not cleared for home consumption or warehoused or transshipped within 30 days from the date of unloading thereof at a customs station or within further time as the proper officer may allow, or in case the title of imported goods is relinquished. So here within 30 days of unloading or within further time as the proper officer allows, if you do not clear the same or the title of any imported goods is relinquished, then after notice to the importer, and with the permission of proper officer, the custodians of the cargo, the persons having custody of the goods, they will sell the goods. Such goods may be sold by the person having custody thereof. Now CBIC has clarified by its circular number 49/2018 that after successful bidder has been informed, this auction takes place. So after the successful bidder has been informed about the result of auction, a consolidated bill of entry, buyer wise will be filed. Consolidated bill of entry buyer wise will be filed with the customs in the prescribed format by the concerned custodian. Now custodian will be filing consolidated bill of entry buyer wise for clearance of the goods as per section 46 of the Customs Act 1962, read with uncleared cargo, uncleared goods, bill of entry, regulations 1972. The proper officer of customs will then assess the goods to duty in accordance with the prevalent guidelines within 15 days of filing of the bill of entry. The proper officer will assess, and after assessment they will inform the duty payable to the concerned custodians. So custodians will be informed about the duty. Then the auctioned good will be handed over to the successful bidder after assessment, and out of charge order is given by the proper officer on payment of the dues. In that particular circumstance, auctioned goods, the same would be handed to the successful bidder. Assessment has been over, out of charge order is given by the proper officer when the payment of the dues have been made. Now we say that if the goods have not been cleared within 30 days after unloading, but in respect of animals, perishable goods and hazardous goods, this time limit will not be applicable. So special provisions in respect of animals, perishable goods and arms, etc. So, however, basically the above time limit of 30 days will not be applicable in case of animals, perishable goods and hazardous goods. The same may be sold at any time by with the permission of the proper officer by the custodians. And arms and ammunition, they may be sold at such time and place as the central government may direct. That is section 48. Now section 49 is storage of imported goods in a warehouse pending clearance or removal. Section 49 is storage of imported goods in a warehouse pending clearance or removal. So basically, where in case of any imported goods, whether dutiable or not, they will entered for home consumption means what? Bill of entry for home consumption is made. They have been entered for home consumption. That is, bill of entry for home consumption has been made. The assistant commissioner or deputy commissioner is satisfied that on the application of the importer that the goods cannot be cleared within a reasonable time. He wants to clear the same, but for other factors he could not clear it. Or in case of imported dutiable goods, entered for warehousing. Now these have been entered for warehousing. The AC or DC is satisfied on application of the importer that the goods cannot be removed for deposit in a warehouse within a reasonable time. Goods cannot be removed, okay, for deposit in warehouse within reasonable time. The goods may pending clearance or removal. Goods may, pending clearance or removal as the case may be, they may be permitted to be stored in public warehouse. They may be permitted to be stored in public warehouse for a period not exceeding 30 days. So basically you have entered the goods for home consumption, but the same could not be cleared within a reasonable time, or imported goods, they are entered for warehousing and the goods cannot be removed for deposit in warehouse. So this basically here to avoid heavy damages. At port, avoid heavy damages at port, what happens is they are allowed to deposit the goods in public warehouse for a period not exceeding what? 30 days. The goods may pending clearance or removal, they may be permitted to be stored in public warehouse for a period not exceeding what? 30 days. However, the goods which are permitted to be stored in public warehouse, because you have not presented, a bill of entry for warehousing, therefore they will not be deemed to be warehouse goods for the purpose of this act. Warehousing provisions will not apply. Warehousing provisions in that case will not apply. Now here they are saying within 30 days time limit is there. The principal commissioner or commissioner, the principal commissioner or commissioner of customs, they may extend the period of storage. They may extend the period of storage for a further period not exceeding 30 days at a time. Principal commissioner or commissioner, they will extend the period of storage basically for a period not exceeding what? 30 days at a time. The said goods, they are kept in warehouse so as to avoid demurrage charges charged by the port trust authority, custodians of the cargo. So this was about why they are keeping the goods in the warehouse to avoid heavy damages. So this is all about what we have discussed relating to clearance of the imported goods. Section 46, we are presenting bill of entry electronically. Then we'll be making the payment of duty as per the rules, and then they will give an order for clearance of goods for home consumption. Section 48 is dealing with the procedure in case the goods are basically not cleared within a period of 30 days. Then we are having section 349, that is warehousing without warehousing. It's also known as what? Warehousing without warehousing. So this is all about our discussion relating to clearance procedure in respect of import. Now let us discuss the flow pattern of export. Flow pattern of import, flow pattern of export. So here we will be discussing about the flow pattern of export. Basically, this is similar to import. First of all, the vessel will be granted entry outwards. Here, the exporter will prepare his shipping bill, and then the same will be presented electronically. And then the custom authorities will give the order for clearance of goods for exportation on payment of export duty, if any, and other charges. Then the goods will be loaded in the vessel under the supervision of the preventive officers. And on the basis of the goods loaded, the person in charge, they will give you the mate's receipt, on basis of which bill of lading will be prepared and handed over to the exporter. Then the person in charge of the conveyance, that is the vessel, they will present their departure manifest or export report. And then the same will be checked by the customs department, and under section 42, the conveyance will be allowed, will be given a written order. So here also we have made what? Like bill of entry, shipping bill, electronic integrated declaration, and paperless processing regulations 2019. Shipping bill, Electronic Integrated Declaration and Paperless Processing Regulations 2019. So here, any authorized person, that is the exporter or custom broker authorized by him, the exporter or custom broker authorized by him shall enter electronic integrated declaration, that is particulars relating to export goods, and upload the supporting documents on the ICE gate by fixing the physical digital signature, okay, or they can take the help of the service centers also for filing the this electronic shipping bill along with the supporting documents. When the shipping will be deemed to be filed and when the assessment is completed, when the basically the number has been assigned, shipping bill shall be deemed to have been filed, shipping bill shall be deemed to have been filed and self-assessment completed when after entry of the electronic integrated declaration on the ICE gate or by way of data entry through service center, a shipping bill number is generated by the ICDIS for the said declaration. Then after the completion of the assessment, payment of export duty, cess, etc., and after examination of export goods, they will give you an order permitting clearance and loading of goods for exportation. Okay? So an order permitting clearance will be given and same will be made, same will be recorded in the ICE gate and it will be conveyed electronically to the authorized person, the custodians and other persons designated by the authorized person. The authorized person, they will have to retain here also the copies of the order and whatever supporting documents have been presented for a period of say 5 years. So the authorized person, they shall retain for a period of 5 years from the date of presentation of shipping bill, the assessed copy of shipping bill, digital or otherwise, and all supporting documents in original, which were used or relied upon by him, submitting the electronic integrated declaration, and shall produce them before custom authorities in connection with any action or proceedings under the Act, under any other law for the time being in force. Then the authenticated copy of shipping bill may be generated at the request of the authorized person if possession of the said copy is required by him for compliance of the provisions of law for the time being in force. If you do not comply with the provisions of these regulations, then penalty will be levied, which may extend to rupees say 50,000. Then the export goods, along with the assessed shipping bill, the same will be presented to the preventive officers of customs. These are the customs officers who are in charge of, at the time, they are supervising the loading of the goods. They are the preventive officers. They see whether smuggling is carried out or not. Then the assessed shipping bill is along with the order which has been received from the preventive officer, that is leadship permission. So that is leadship order. First of all, the export goods along with the assessed shipping bill, the same is presented to whom? The preventive officers of the customs. They are the officers in charge of supervision of the loading of cargo. Permission of loading of goods, that is leadship order, is given by the preventive officer if he is satisfied that all custom checks, including the export trade control license and export duty payment, have been say completed. Here the assessed shipping bill is presented to the master, agent or mate of the vessel who shall permit the loading of the goods. If the vessel is anchored in the mid-sea, the goods have been taken to the ship by boats and lighters and boat note procedure is required to be followed. And on receipt of the cargo on board the ship, the master, mate or agent of the ship will issue a receipt of the quantity and the particulars of the cargo loaded on the ship which is endorsed by the custom officers. Then in case if the entire goods have not been shipped, so we have presented 15,000 kgs of the goods, but say 14,800 kg has been shipped, 200 kg has not been shipped. Then we have to give the short shipment notice within 7 days of the departure. So if any goods mentioned in the shipping bill or bill of export and cleared for exportation, they are not exported, the exporter shall within 7 days from the date of departure of the conveyance by which the goods were intended to be exported, furnish information in writing to the proper officer in respect of the goods not so exported. There is number of the packages, the description which have not been loaded of the goods, quantity, value, country of the destination, and present the shipping bill or bill of export for cancellation or amendment. Either the shipping will be amended or the same will be cancelled. Then an exporter who fails to comply with the above provisions, he will be liable to penalty not exceeding rupees say 100. Then we discuss about the, first of all, the vessel will be granted what? Entry outwards. That is section 39. So section 39, it is dealing with what? Entry outwards. That is what? The export goods not to be loaded on vessel until entry outwards granted. Export goods not to be loaded on vessel until say entry outwards granted. That is what? The master of the vessel, he shall not permit the loading of any export goods. The master of the vessel, he shall not permit loading of any export goods other than baggage and mail bags. Other than baggage and mail bags. Until an order has been given by the proper officer granting entry outwards to the vessel. Until an order has been given granting entry outwards. Then when they have given the order and when the shipping bill or bill of export has been presented, then the master of the vessel will check the goods along with the shipping bill, and then only the goods will be loaded, which have been duly passed by the proper officer. So the person in charge of conveyance, shall not permit the loading at the custom station of what? Export goods other than baggage and mail bags, unless say a shipping bill or bill of export or bill of transshipment duly passed by proper officer has been handed over to him by the exporter, or of say baggage and mail bags, unless their export has been say duly permitted by the proper officer. Then we are having section 41. Section 41 is dealing with delivery of departure manifest or export manifest or export report. So when all the goods have been shipped, then the person in charge of conveyance shall prepare what? The export manifest or say the departure manifest or say the export report. Export report is in case of the vehicle, and export manifest and departure manifest in case of vessel or aircraft. So here the person in charge of conveyance carrying export goods or imported goods, the person in charge of conveyance carrying export goods or imported goods, or other person as may be specified by the central government, that is their steamer agents, they shall, before the departure of the conveyance from custom station, they shall say, before departure of conveyance from custom station, deliver to the proper officer. In case of vessel or aircraft, either the departure manifest or export manifest electronically, and in case of vehicle, it's an export report. In case of vessel or aircraft, this is this. And here, penalty will be levied in case the same is not presented within the time, penalty not exceeding rupees 50,000. So in case such person in charge or other person fails to deliver the departure manifest or export report or any part thereof within such time, and the proper officer is satisfied that there is no sufficient cause for such delay, such person in charge or the person shall be liable to penalty not exceeding rupees 50,000. Then in case electronic filing is not feasible, then the same may be presented in physical form. So the principal commissioner or commissioner of customs may, in cases where it is not feasible to deliver the departure manifest or export manifest by presenting electronically, allow the same to be delivered in any other manner. And the person delivering the departure manifest or export manifest or export report shall at the foot thereof makes and subscribes a declaration as to the truth of the contents. Here also, if there is any, say something has been left out, the same can be amended or it can be supplemented. If the proper officer is satisfied that departure manifest or export report is in any way incorrect or incomplete and there was no fraudulent intention, then he may permit the same to be, say, amended or, say, supplemented. Similar to the arrival manifest, that is passenger arrival manifest or passenger name record information, there is a departure manifest also, that is 41A, that is passenger and crew departure manifest and passenger name record information. Passenger and crew departure manifest and passenger name record information. There is a person in charge of conveyance that departs from India to place outside India, or any other person as may be specified by central government shall deliver to the proper officer the passenger and crew departure manifest and passenger name record information of the departing passengers in such form, containing such particulars in such manner and within such time as may prescribed. And in case if the same is not presented within the prescribed time and there is no sufficient cause for delay, then penalty can be levied not exceeding rupees 50,000. So where the passenger or crew departure manifest or passenger name record information or, say, any part thereof is not delivered to the proper officer within the prescribed time, and if the proper officer is satisfied that there was no sufficient cause for such delay, then the person in charge or the other person shall be liable to penalty not exceeding rupees, say, 50,000. Then section 42 is no conveyance to leave without, say, written order. Section 42 is no conveyance to leave without the written order. Here basically the person in charge of conveyance which has brought any imported goods or loaded any export goods, they will not permit the conveyance to depart from India until a written order has been given by the proper officer. So they will not depart from the customs station until a written order has been given by the proper officer. And no such order shall be given by the proper officer until the person in charge has answered the questions which have been put to him under section 38. Person in charge has answered the questions which have been put to him under section 38. The provisions of section 41, that is delivery of departure manifest or export manifest or export report, have been, say, complied with. Provisions of 41 have been complied with. He has answered the questions. Provisions of 41 have been complied with. Shipping bill, bill of export or bill of transshipment or any other document as the proper officer may require has been delivered to him, then all the duties leviable on any stores consumed in such conveyance and all charges, penalties due in respect of the conveyance, either same has been paid or payment is secured by such a guarantee or deposit of such amount as a proper officer may direct. Then the person in charge of conveyance has satisfied the proper officer that no penalty is leviable on him under section 116. No penalty is leviable under 116 or payment of penalty that may be levied upon him has been secured by such guarantee or deposit of such amount as the proper officer may direct. And then if in any case where export goods have been loaded without the payment of export duty or in contravention of the provisions of the Act or say any other law for the time being in force, such goods have been say unloaded, or when the AC or DC is satisfied that it's not practicable to unload the goods, then the person in charge has to give an undertaking to bring back the goods. So then only this written order will be given. First of all, the person in charge has answered the questions which have been put to him under 38. Provisions of 41 have been complied with. Shipping bill, bill of export, bill of transshipment have been delivered basically to the proper officer. Duties of stores which have been consumed therein, the same has been paid, or payment is secured by such guarantee or deposit of such amount as the proper officer directs. And if penalty is leviable under section 116 on accounting or non-accounting of goods, either same has been paid or payment is secured by such amount as the proper officer directs. And in case if the goods have been unloaded without the permission, either the same has been loaded without the permission of the proper officer, the same have been unloaded, or the AC or DC is satisfied that it's not practicable to unload the goods, then in that case, the same will be brought back. Then section 43 is dealing with exemption from certain classes of conveyances from certain provisions. They basically, the provisions of 30, that is import manifest, export manifest, written order will not apply to any vehicle which carries on goods. Then the central government may by notification exempt the following classes of conveyances from all or any of the provisions of 29 to 42. Basically, in case it's a government vessels or any foreign government conveyances, in that case exemption will be provided, or say vessels or aircraft which are temporarily entering India for reasons of any emergency. Then section 50 is what? Entry of goods for exportation. Section 50 is entry of goods for exportation. So here shipping bill, as we have seen, or bill of export. Shipping bill is in case of vessel or aircraft. Bill of export is in case of vehicle. Shipping bill or bill of export is presented electronically. Okay. The same is presented electronically by the exporter for clearance of export goods. For clearance of export goods. Shipping bill or bill of export is presented electronically for clearance of the export goods. But in case if the electronic filing is not feasible, then the same can be presented in physical form also. And here, the exporter of any goods, while presenting shipping bill or bill of export, they shall make and subscribe to a declaration as to the truth of the contents. And the exporter who presents the shipping bill or say bill of export shall ensure the following, namely, the accuracy and completeness of the information given therein, the authenticity and the validity of any documents supporting it. Okay? And compliance with the restrictions or prohibitions, if any, relating to the goods under the Act or under any other law for the time being in force. Then section 51 is clearance of export goods for exportation. Section 51 is clearance of, say, export goods for exportation. So here the proper officer may make an order permitting, say, clearance and loading of goods for exportation. When they will give an order, when the shipping bill or bill of export has been presented, when the shipping bill or say bill of export has been presented, the proper officer is satisfied that goods are not prohibited goods. The proper officer is satisfied that the goods are not prohibited goods, and the exporter has paid the duty. The exporter has paid the duty, if any, assessed on such goods, and any charges payable under the act in respect of the same. And for this purpose, they have made what? The deferred payment of duty, deferred payment option has been, say, given. Then 51A is, say, here if you do not pay the duty by the time limit, then you will be required to pay interest also. But as such, here the rate is still not been, say, notified. Then payment of duty, interest and penalty, we have this electronic cash ledger. Here amount deposited for payment of duty will be credited to electronic cash ledger, and when same is used, it will be debited for payment. When it's used for payment of duty, it will be debited. So it's just like electronic cash ledger under GST. We have electronic cash ledger here also. So every deposit made towards what? Payment of duty, interest, penalty, fees, or any other sum payable by a person under the provisions of this Act, under Customs Tariff Act 1975, or any other law for the time being in force, or rules and regulations made thereunder, in using authorized mode of payment, shall, subject to such conditions and restrictions, be credited to the electronic cash ledger of such person, to be maintained in such manner, say, as may be prescribed. And here the amount of available in the electronic cash ledger, the same will be used for making payment towards the duty, interest, penalty, fees, or any other sum payable. And if any balance is there, the same will be refunded, and exemption can be provided for maintenance in certain classes of, say, deposits of by certain classes of persons, or for certain categories of goods. So here, if the board is satisfied that it is necessary or expedient so to do, it may by notification exempt the deposits made by such class of persons or with respect to such categories of goods as may be specified in the notification from all or any of the provisions of the section. Then we have 51B. 51B is basically duty credit ledger. That is, central government may by notification specify the manner in which the to issue, say, shall issue what? Duty credit. So we are having duty credit scripts. Say there is a RODTEP scheme, remission of duties and taxes, on export product scheme. So we create a credit on the basis of our exports. And this duty credit can be used for payment of custom duty on imports. So here the central government may by notification specify the manner in which it shall issue duty credit in lieu of, say, remission of any duty or tax or levy chargeable on any materials used in manufacture or processing of goods, or for carrying out any operations on goods in India that are exported, and in lieu of such other financial benefit subject to such conditions and restrictions as may be specified therein. Then the duty credit shall be maintained in the customs automated system in form of electronic duty credit ledger, and the same will be utilized. Basically, the duty credit will be utilized for, say, payment of the duty. Under this act, under the Customs Tariff Act, subject to such conditions and limitations as may be say prescribed. Then we will be discussing in our next lecture relating to what transit. Now we will be starting the discussion relating to transit and transshipment. Transit and transshipment. So here the provisions will not be applicable. What section 52 states is the provisions of transit and transshipment will not be applicable in case of baggage, goods imported by stores and goods imported by post and stores, because separate provisions have been made in respect of transit and transshipment in relation to baggage, goods imported by post and say stores. Separate provisions have been made in respect of the same. Then what is the difference between transit and transshipment? What is the difference between transit and transshipment? Say in case of transit of goods, in case of transit of goods, the conveyance remains same. In case of transit of goods, the conveyance remains same. In case of transshipment, the conveyance changes. The conveyance changes. In case of transit, the conveyance remains same. In case of transshipment, the conveyance changes. That is, goods are unloaded from one conveyance and loaded in another conveyance. And loaded in another conveyance. Loaded in say another conveyance for transit for transshipment in India or transshipment outside India. Section 53 is dealing with the provisions relating to transit of goods. Section 53 is dealing with the provisions relating to transit of goods. Section 54 is dealing with the provisions relating to what? Transshipment of goods. Section 54 is dealing with the provisions relating to transshipment of goods. So basically, where any goods imported in a conveyance and mentioned in the arrival manifest or import manifest or import report, as the case may be for transit in the same conveyance. Transit is in the same conveyance to any place outside India or to any custom station, the proper officer may allow the goods and the conveyance to transit without payment of duty, subject to such conditions as may be say prescribed. The proper officer will allow the goods and conveyance to transit without payment of duty. The transit will be allowed in the same conveyance without payment of duty to place outside India or to custom station in India. So here the transit and basically the transit is subject to the conditions as may be prescribed, and here the goods would not be been prohibited under section 11 of the Customs Act. The goods should not have been prohibited under section say 11 of the Customs Act. Goods must not have been prohibited under section 11 of the Customs Act. Then we are having transshipment of goods. So goods are unloaded from one conveyance and loaded in another conveyance. Now, in case of, say, transshipment, so goods are, say, transferred from one conveyance to another. Okay. Now, section 54, it is dealing with transshipment of goods. So basically, this refers to transfer of goods from one conveyance to another. It may be from, say, one custom station to any custom station in India. It may be from any one custom station to any other custom station in India. So here, where basically the goods imported into a custom station, goods imported into a custom station, they are intended for transshipment. They are intended for transshipment. The person in charge of conveyance will have to present a bill of transshipment. Person in charge will have to present, say, bill of transshipment to the proper officer in such form and manner as may prescribed. And in case the goods are transshipped under international treaty, if the goods are transshipped under international treaty, instead of bill of transshipment, declaration of transshipment is to be given. Just by declaring, the goods can be transshipped outside India. Similarly, where any goods imported into a customs station are mentioned in the arrival manifest or import report for transshipment to any place outside India, such goods will be allowed to be transshipped without payment of duty. Transshipment outside India will be allowed without payment of duty. However, the goods should not have been, say, prohibited. The goods must not have been prohibited under section 11 of the Customs Act. Then, where any goods imported into customs station, they are mentioned in the arrival manifest or import report for transshipment to any major port, or to any custom airport or custom port or any other custom station, and proper officer is satisfied about the bona fide intention for transshipment of the goods to such custom station, the proper officer may allow the goods to be transshipped without payment of duty. The proper officer may allow the goods to be transshipped, say, without payment of duty. Proper officer may allow the goods to be transshipped without payment of duty. Now, what is the difference between transit and transshipment? Here, section 53 provides for transit of goods. Section 54 provides for transshipment of goods. So, transit of goods is there, statutory provisions. The transit of goods, in case of transit of goods, as we have discussed, the conveyance will remain same. In case of transit of goods, goods are allowed to remain on the same conveyance. In case of transshipment of the goods, the conveyance changes. That is, goods are unloaded from one conveyance and loaded in another conveyance. Goods are unloaded from one conveyance and the same they are loaded in, say, another conveyance. Then, in case of transit, the record already made in ships, aircraft's manifest continues. So, there is same documentation. They are mentioned in the import manifest or, say, import report. For transit in or outside India, it is known as, say, same bottom or retention cargo. Okay. In case of transshipment of goods, continuity of records is not maintained. A bill of transshipment is separately required to be presented. Then, in case of transit, no supervision is required for transit goods. In case of transit, no supervision is required for transit goods. Say, in case of transshipment, transshipment takes place under the supervision of the proper officer. Transshipment takes place under the supervision of the proper officer. Then, no additional conditions or formalities are required. No additional conditions or formalities are required. Now here, specific conditions are imposed if the goods are deliverable at Indian port. Specific conditions are, say, imposed if the goods are deliverable at, say, Indian port. Then, transit is allowed in every port normally. Transshipment is allowed in specified ports normally. Transit is allowed in every port normally. Transshipment is allowed, say, for specified ports normally. Then section 53 is dealing, 55 is dealing with what? Here, that liability to pay duty in case of transit and transshipment will arrive at the custom station where the goods are cleared. So what section 55 provides is that liability to pay custom duty is at the custom station from where the goods are cleared. They are entered in same manner as they are entered on first importation. So they are entered in the same manner as they are entered on the first importation. That is provided in section 55. So where any goods, they are allowed to be transited under 53 or transshipped under 54 to any custom station, then on their arrival at such custom station, they shall be liable to duty. They shall be entered in the like manner as the goods are entered on first importation, and the provisions of the Act and the rules and regulations shall apply in relation to such goods. Then section 56 is transport of certain classes of goods subject to prescribed conditions. So the imported goods may be transported without payment of duty from one land custom station to another. And the goods may be transported from one part in India to another part through foreign territory. This has been through foreign territory, subject to such conditions prescribed for due arrival of such goods at the place of destination. For due arrival of the goods at the place of destination. So this was all about what? Transit and transit. Now we'll be starting with the provisions relating to baggage. So basically, baggage, it includes what? Unaccompanied baggage, but does not include motor vehicle. So whatever passengers they are coming from India or they are going out of India, along with them they are carrying their luggage, in which they are bringing their personal effects and other articles in that baggage. So special provisions have been made relating to baggage. Basically, the rate of duty on baggage is 35%. No integrated tax and no social welfare surcharge is levied on the same. And if concession is not available, then that baggage duty is levied at rate of, say, 70%. So here baggage rules have been framed, and these rules have been redrafted in 2026. So baggage rules 2026 have been framed, which provides for the duty free allowance, or say general free allowance, in respect of baggage. So let us discuss the provisions relating to baggage. What section 77 provides is that the owner of the baggage will have to declare the contents to the proper officer in baggage declaration form. He has to fill up a baggage declaration form in which he will be required to declare the contents of the baggage. So section 77 is declaration by the owner of baggage. So the owner of any baggage, for the purpose of clearing it, will make a declaration of its contents to the proper officer. The owner will make a declaration of the contents to the proper officer. Basically, baggage includes unaccompanied baggage. Baggage includes, say, unaccompanied baggage, but does not include motor vehicle. The term baggage is a comprehensive term which means the luggage of the passenger which is accompanying, it is unaccompanied. In case, say, he is transferring his residence, he may not be bringing the entire baggage with him, then it is an unaccompanied baggage and comprises of trunks or bags and personal belongings of the passenger. Now, section 78 is important. Section 78 deals with what? Date for determination of rate of duty and tariff valuation in respect of baggage. Section 78 is date for determination of rate of duty and tariff valuation in respect of baggage. The rate of duty and tariff valuation applicable to baggage shall be the rate of duty and value in force on the date on which the baggage declaration is made under section 77 to the proper officer. So of which date the rate of duty will be applicable? The rate of duty will be applicable of the date when baggage declaration is made to the proper officer. Now here, if such declaration has been made before the arrival of the vessel, if the declaration has been made before the arrival of the vessel, then the same shall be deemed to be presented on the date of the arrival of the vessel. Now here, as we already discussed, what is the rate of duty applicable in respect of baggage? Any article, the value of which exceeds the duty-free allowance which is admissible to the passenger or the member under baggage rules 2026, the same is leviable with 35% duty, 35% ad valorem duty. And on unaccompanied baggage, it is 35%. On unaccompanied baggage also, it is 35%. Integrated tax has been made exempt. GST compensation cess has been made exempt on passenger baggage. Besides this, passenger baggage has been exempted from the social welfare surcharge also. Passenger baggage has been exempted from social welfare surcharge also. Hence, effective duty is 35% and the standard rate of duty on baggage 70% under heading 9803 of the custom tariff. Now, bona fide baggage has been made exempted from duty. Basically, the provisions relating to duty exemption of baggage is provided under section 79. And they say that the proper officer may, subject to the rules made under section 79(2). The proper officer may, subject to the rules made under 79(2), they may pass free of duty. They may pass free of duty any article in the baggage of passenger or a member of crew in respect of the which the said officer is satisfied that had been in his use for a minimum period as may be specified in the rules. So any article in the baggage of passenger or member of crew in respect of the which the said officer is satisfied that it has been in his use for such minimum period as may be specified, that can be passed duty free. Then article in baggage of passenger in respect of which the said officer is satisfied that it is used for the passenger or for his family, or say is a bona fide gift or souvenir, provided the value of each such article and the total value of all such article will not exceed the limits which has been specified in the rules. Besides this, the Central Board of Indirect Taxes and Customs, they may make regulations. They may make regulations relating to what? How you will be declaring the contents of any baggage. So the manner of declaring the contents of any baggage. Then custody, examination and assessment to duty and clearance of baggage. Custody, examination, assessment to duty and clearance of baggage, and transit and transshipment of baggage. Transit and transshipment of baggage from one custom station to another or to a place outside India. Then we have provisions relating to temporary detention of baggage. Now it may so happen that if bring any article, say dutiable goods, and or if you are bringing any, say, prohibited goods, and for which you are given a true declaration in your baggage, then you can ask them that these goods can be kept in their custody of the department, and whenever you will be going back, the same will be returned back to you. In that case, duty will not be levied. That is basically temporary detention of baggage that has been provided in section 80. So, where the baggage of a passenger contains any article which is dutiable, either the same is dutiable or the import of which is prohibited, and in respect of which a true declaration has been made under section 77. Fundamental thing is a true declaration has been made under 77. The proper officer may, at the request of passenger, detain such article for the purpose of being returned to him on his leaving India. He may detain such article for the purpose of being returned to him on his leaving India. So here duty won't be leviable. They will detain and the same will be returned back to him when he is subsequently going back out of India, or it may be returned to any person, authorized by that person, or it may be, cargo may be consigned in his name. So, however, if for any reason, the passenger is not able to collect the article, at the time of his leaving India, the article may be returned to him or through any other passenger authorized by him and leaving India, or say as a cargo consigned in his name. So these goods can be kept by the Customs Department. No duty will be levied on the same. Now we come to what? The baggage rules 2026. Earlier we were having baggage rules 2016, but now new rules have been framed, that is baggage rules 2026. And basically rule 3, it provides for what? Duty free import of parcel effects. Rule 2 is definitions. Rule 1 is short, title, extent and commencement. So basically what they are saying, a passenger including an infant arrive in India, if they are coming from outside India to India, shall be allowed clearance used parcel effects. Basically used parcel effects required for satisfying the daily necessities of life, and of travel souvenirs. Travel souvenirs, where you are coming from, say Dubai, then you are bringing along with you some of the memories relating to Dubai. Then that is basically travel souvenirs carried on the person or in his bona fide baggage free of duty, other than the articles which have been mentioned in Annexure 1. So basically it is applicable. This rule 3 is also one of the part of general free allowance itself. What is free? Here used personal effects and travel souvenirs can be brought duty free. Used personal effects and travel souvenirs can be brought duty free in the baggage. Now, personal effect means all articles. Personal effect means all articles. It can be new or it can be used, which a passenger may reasonably require for his personal use. For his personal use during the journey, taking into account all circumstances of journey. During the journey, taking into account all circumstances of journey, but excluding any goods imported or exported for commercial purposes. But that will not, if you are importing or exporting any goods for commercial purposes, that won't be coming under the ambit of, say, personal effects. Then infant means a child not more than 2 years of age. So basically we have seen that passengers who are coming to India, they will be allowed personal effects, and personal effects includes all articles, new or used, but here specifically they have used the word used personal effect. That means what? Interpretation can be made that new articles may not be allowed. Other way it can be also that personal effects includes what means all articles, new or used, which a passenger may reasonably require for his personal use during his journey. Basically infant is a child not more than 2 years of age. Then what happens is they have made rule 4, that is what? Provisions for re-import and temporary import. So basically if you are a passenger, Indian passenger, you may go out of India, then you may bring again come back to India. So what some of the articles may be brought by you, which have been taken by you outside India at a time when you have left. So that is also allowed. And tourists, they are also allowed to bring certain articles, that is used personal effects required for satisfying the daily necessities of life. Rule 4 basically is dealing with provisions for re-import and temporary import. So any article of a personal effects, any article of personal effects other than used personal effects. Used personal effects were allowed earlier. So any article of personal effects other than used personal effects required for satisfying the daily necessities of life. The same has been taken out earlier. The same has been taken out earlier. By whom? By a resident. Who is a resident? Who is having a valid passport. Who is having a valid Indian passport. Is a resident here. Or say tourists of Indian origin. He is a tourist of Indian origin. Or he is a foreigner with valid visa. He is a foreigner with valid visa other than tourist visa. He is not a foreigner with tourist visa. Foreigner with tourist visa will be covered here. So basically any article of personal effect other than used personal effect required for satisfying the daily necessities of life taken out earlier by a resident, tourist of Indian origin, or a foreigner with a valid visa other than tourist visa, that is non-tourist visa basically, or a member of his family from India, they shall be allowed free of duty on submission of declaration made at a time of his departure from India, electronically or otherwise, subject to satisfaction of the same to DC or AC as the case may be. So what will be allowed duty free? Articles of personal effects which were taken out of India, they can be brought back India without duty. Okay, any article or personal effect other than used personal effect required for satisfying the daily necessities of life taken out earlier by a resident or a tourist of Indian origin or a foreigner with a valid visa other than tourist visa or member of family from India shall be allowed free of duty on submission of declaration made at the time of his departure from India, electronically or otherwise, subject to satisfaction of same by AC or DC. Similarly, any article of personal effects, any article of personal effects other than used personal effects required for satisfying the daily necessities of life, carried on by a tourist required for a stay in India, that is temporary import, may be allowed to be imported temporarily, free of duty on submission of a declaration made electronically or otherwise, subject to their re-export, subject to their re-export on leaving India for a foreign destination. Now, basically, you will be importing, or you may be temporarily importing, or you may be re-importing as per rule 4. When passengers who are availing this facility, passengers availing the facility under this rule may be subject to risk-based verification. Passenger availing the facility under this rule may be subject to what? Risk-based verification. Who is a resident? Resident means a person. He is ordinarily residing in India. He is ordinarily residing in India. He is having a valid passport issued under the Passport Act 1967. Who is a tourist? Those who are coming for touring purposes in India. Their stay in India does not exceed 6 months in a legitimate 12 months period. So basically, what they are, tourist means a person not ordinarily resident in India. He is not resident in India. Who enters India for stay for not more than 6 months in course of any 12 months period for legitimate non-immigrant purposes. And foreigner with a valid visa other than tourist visa means a foreigner possessing a valid visa other than tourist visa and stays for more than what? 6 months. His stay is for more than 6 months, then he won't be coming under the ambit of tourist, but he may be coming under the ambit of what? Foreigner with a valid visa. Now we have seen rule 3. What we have seen? Rule 3 we have already seen. Now we see what? Rule 4 we have seen. Rule 5 now it's general free allowance. It is a general free allowance. So basically what general free allowance is? So general free allowance that has been allowed in respect of residents, tourists of Indian origin or foreigner with a valid visa other than tourist visa. Their general free allowance will be rupees 75,000. So we can say we are allowed use personal effects plus rupees 75,000 duty free allowance of articles other than those mentioned in Exor 1. If you are coming from India, from outside India to India, 75,000 rupees articles can be brought duty free. And general free allowance of one passenger, general free allowance of one passenger cannot be pooled with other passengers. So let us see. General free allowance in case of resident or tourists of Indian origin, in case of resident or tourists of Indian origin or a foreigner with a valid visa other than tourist visa. So resident or a tourist of Indian origin or a foreigner with a valid visa other than tourist visa, not being an infant. Now he is arriving in India other than by land. It may be by ship or it may be by air. Shall be allowed clearance free of duty article in his baggage other than those mentioned in Exor 1 up to a value of rupees 75,000. Up to a value of rupees 75,000. If such articles are carried on the person or in the bona fide baggage accompany the passenger. So, one is personal effects, used personal effects are allowed. One is this general free allowance of rupees 75,000. In case of residents, foreign Indian tourists and foreigners who are residing in India. Then if you are having a tourist visa and you are coming to India, your GFA will be 25,000. Basically tourists of foreign origin. General fee allowance is rupees 25,000. Basically, a tourist of foreign origin, not being an infant, arriving in India, other than by land, shall be allowed clearance free of duty other than those mentioned in Annex 1. Up to a value of rupees 25,000. If these are carried on the person, or in the bona fide baggage of the passenger. If you are arriving by land, then you will be allowed only general use personal effects required for satisfying the daily necessities of life. So where the passengers are arriving by land, only use personal effects required for satisfying the daily necessities of life shall be allowed duty free. Then one laptop is exempt. If you are a passenger 18 years of age or above, other than crew member, shall be allowed clearance one new laptop including notepad, free of duty in his bona fide baggage. Now pooling is not permissible. Then for the purpose of this rule, free allowance of passenger shall not be allowed to be pooled with free allowance of any other passenger. Free allowance of one passenger will not be allowed to be pooled with the free allowance of, say, any other passenger. Okay. GFA of one passenger will not be allowed to be pooled. Now we have seen that we will be allowed to bring articles other than those mentioned in Annex 1. So GFA is not available in respect of these articles. General fee allowance is not available. What are they? Firearms. On firearms, you won't be getting the benefit of general fee allowance. Then cartridges of firearms exceeding 50. Up to 50 can be accommodated in GFA. Cartridges of firearms up to 50 can be accommodated in general free allowance, but above 50, that whatever is in excess of 50 won't be available. Then cigarettes exceeding 100 sticks, cigars exceeding 25, or tobacco exceeding 125 grams. Cigarettes exceeding 100 sticks, cigars exceeding 25, and tobacco exceeding 125 grams. Then alcoholic liquor or wines in excess of 2 liters. Up to 2 liters can be accommodated in GFA. Up to 3 liters can be accommodated in GFA. Then gold or silver in any form other than ornaments. If it is in form of ornaments, that is, if it is in form of jewelry, Jewelry can be accommodated, but gold bullion, silver bullion, etc. is there. Then in that case, it won't be coming under the ambit of GFA. You won't be allowed to bring that under general free allowance. And television, that won't be allowed. Firearms, cartridges of firearms exceeding 50, cigarettes 100 sticks, cigars exceeding 25, and tobacco exceeding 125 grams. Alcoholic liquor or wines exceeding 2 liters, gold or silver in any form other than ornaments, and televisions. So that is about what? Rule 5. So rule 3, use personal effects can be brought. Rule 5, this is general free allowance, 75,000, 25,000, one laptop exempt. Okay, then pooling is not permissible. Then special allowance for jewelry. Rule 6 is special allowance for jewelry. So resident or tourists of Indian origin residing abroad for more than 1 year. So they are, if he is a resident, stay outside India is more than 1 year. He can bring what? Jewelry up to 40 grams weight if this is a lady passenger, and other than lady passenger up to 20 grams weight. So basically a resident or tourist of Indian origin who is residing abroad, important aspect is he must exceed 1 year, more than 1 year. On his return to India, he will be allowed articles, duty-free clearance of jewelry in his bona fide baggage. In case of lady passenger, jewelry up to say 40 grams weight, and other than lady passenger, jewelry up to 20 grams weight. Okay. Then rule 7. Rule 7 is dealing with what? Transfer of residence. It's a very, very important rule. Now, basically, it is for a resident who is having a valid passport or tourist of Indian origin, or in case if he is a foreigner who is residing in India with a non-tourist visa, foreigner with a non-tourist visa. So, for them, this transfer of residence allowances, they are under Rule 7. So, a resident or a tourist of Indian origin engaged in his profession abroad, and in case if he transfers his residence in India on return, shall be allowed clearance free of duty in addition to whatever is allowed under Rule 3. He is allowed there. Rule 5, that is up to 75,000, that will be there. Rule 6 will be on condition, satisfaction of condition. Then we are having Rule 7. So, in addition to what is allowed under Rule 3, or as the case may be under Rule 5, articles in his bona fide baggage to the extent mentioned in column 2 of this table, with the conditions which are mentioned in column 3 and relaxations which are there in column 4. So basically, who is getting the benefit? He is a resident or an Indian tourist of say Indian origin, not tourist of foreign origin. It's a tourist of Indian origin. He was engaged there, now he is transferring his residence. So he is making transfer of residence visa. Basically, they will be allowed clearance free of duty in addition to whatever is allowed in Rule 3 or Rule 5. So, if his duration of stay abroad is from more than 3 months, from 3 months up to what? 12 months. From 3 months up to 12 months. Then personal and household articles can be brought duty free. other than those mentioned in Annexure 1. As we have seen, you won't be getting the benefit of Annexure 1, but including articles mentioned in Annexure 2. So they will be allowed personal and household articles up to value of rupees 150. 150 that plus 75,000 is allowance in respect of Rule 5. So basically, personal and household articles other than those mentioned in Annexure 1, but including articles mentioned in Annexure 2, not more than 1 unit each. Remember, it's not more than 1 unit each. Not more than 1 unit each. So only 1 unit of the articles can be brought under this concessional allowance. Other than that, duty will be levied. And value is up to rupees 1,50,000. So from 3 months to 12 months, stay abroad, he is there, and now he is coming back, he is transferring his residence in India, he will be allowed articles other than those mentioned in Annexure 1, but including articles mentioned in Annexure 2, up to an aggregate value of rupees 1,50,000, but not more than 1 article. So if he wants to bring 2 articles, say in that particular circumstance, he won't be getting the benefit of only 1 and not 2. Annexure 2 we will be discussing here. Annexure 2 has been provided. This is Annexure 2. These articles can be brought by him. Then if he stay abroad is minimum stay 1 year abroad. Minimum stay of 1 year abroad during preceding 2 years. During preceding 2 years, his minimum stay is 1 year abroad, and now he is transferring his residence. Then personal and household articles other than those mentioned in Annexure 1, but including articles mentioned in Annexure 2, not more than 1 unit each. So this part will remain same everywhere. This part will remain same. So you remember once here, then subsequently you have to just remember the limit. Limit here is what? Rupees 3 lakhs. Now, if his minimum stay is 1 year abroad, and now he is transferring his residence during preceding 2 years, he has stayed abroad for more than a year, then he would be allowed articles of Annexure 2, 1 unit each up to rupees 3 lakhs. Okay, up to rupees 3 lakhs. Passenger should not have availed this concession in preceding 3 years. He must not have availed this concession in preceding 3 years. Then in case if he stay abroad is for more than a 2 year, 2 years or more, it is 2 years or more. So minimum stay of 2 years or more. So he will be allowed personal and household articles. Personal and household articles other than those listed in Annexure 1. Other than those listed in Annexure 1, but including articles mentioned in Annexure 2, not more than 1 unit each, up to 750. So it is 150 up to 12 months, 3 months to 12 months, then it becomes 3 lakh up to 2 year, and more than 2 year, 7,50,000 articles can be what? Duty free here. Now here the minimum stay of 2 years abroad, condition is what? Minimum stay of 2 years abroad immediately preceding the date of his or her arrival on transfer of residence. His minimum stay must be 2 years. He must not have availed this concession in preceding 3 years, and he can come here for short visits. Okay, during the 2 years preceding years, but it should not exceed what? 6 months. So minimum stay of 2 years abroad or immediately preceding the date on transfer of his or her arrival on transfer of residence. Now for condition number 1, shortfall up to 2 months may be condoned by AC or DC because his early arrival, he is not stayed abroad for 2 years, then shortfall up to 2 months in his stay abroad can be condoned by AC or DC if early arrival is on account of terminal leave or vacation being availed of by the passenger, or any other special circumstances for reasons to be recorded in writing. Any other special circumstances for reasons to be recorded in writing. Then total stay in India. Total stay in India on short visits during 2 preceding years should not exceed what? 6 months. So if it's 2 years stays abroad, say from 26 in 2026, 2027, he has stayed abroad. Now he is say transferring his residence. So his stay is abroad. He can visit here in India for say 6 months period. For this principal commissioner or commissioner, we can condone the delay, condone for more than 6 months visits also, for reasons to be recorded in writing. So if person is transferring his residence, he may be coming to India, seeing what is the condition of India, therefore he may come and live here also. So basically in that case he will be getting the benefit, okay, for more than 6 months. If he stays there, then principal commissioner or commissioner must be satisfied in this regard. They will condone the same. Then the passenger has not availed this concession in the preceding 3 years. So 3 lakhs we have discussed, 150, we have discussed 3 lakh, and we have discussed 750. Now we come to what? Foreigners with non-tourist visa. They are transferring the residence. A foreigner with a valid visa, other than tourist visa, engaged in any profession in India or transferring residence to India, engaged in any profession in India or transferring residence to India, on arrival shall be allowed clearance free of duty. Shall be allowed clearance free of duty. In addition to what is allowed under Rule 3, or the case may be Rule 5. Articles other in bona fide baggage to the extent mentioned in column 2, subject to the conditions which are there in column 3 and relaxations which have been provided in column 4. It's same, but here it was what? 3 to 12 months. It was 3 to 12 months. Here 6 to 12 months. From 6 months up to 12 months. From 6 duration of stay. So from 6 to 12 months. Basically, personal and household articles other than those mentioned in Annexure 1, but including articles mentioned in Annexure 2. Not more than 1 unit each. Not more than 1 unit each, up to an aggregate value of 150. Minimum stay of 6 months in India. Minimum stay of what? 6 months in India. Then condition number 1, shortfall up to 3 months stay in India, they can be condoned by the principal commissioner or commissioner of customs. If early departure, now here they are saying, if early departure is on account of terminal leave being availed by the passenger, so this is in India, okay, from 6 months to 12 months in India. His duration is there, he will be allowed 150 articles. Minimum 6 months stay in India is there, but condition up to 3 months can be condoned by the principal commissioner or commissioner if early departure is on account of terminal leave being availed by the passenger or any other special circumstances. He is tourist. He is a foreigner with a valid visa other than tourist visa. And passenger should not have availed this concession in say preceding 1 year. He must not have availed concession in preceding 1 year. Then no relaxations will be there for this condition. Then minimum stay of 1 year during the succeeding 2 years from date of his arrival in India. Minimum stay of 1 year for during succeeding 2 years from the date of his arrival in India. They will be allowed personal and household articles. They will be allowed personal and household articles other than those mentioned in Annexure 1. other than those mentioned in Annexure 1, but including articles mentioned in Annexure 2, not more than rupees 3 lakhs. Okay. Minimum stay of 1 year during the succeeding 2 years from the date of arrival in India. And for condition number 1, shortfall up to 3 months can be condoned by the principal commissioner or commissioner if the early departure is on account of terminal leave being availed by the passenger while is early departing on account of terminal leave or any other special circumstances. And passenger must not have availed this concession preceding 3 years, no relaxation for this. Then minimum stay of 2 years or more in India. If he is transferring his residence and his stay in India is 2 years or more, so he can bring personal and household articles other than those mentioned in Annexure 1, but list articles mentioned in Annexure 2 up to 1 unit each, up to rupees 7,50,000. Now here minimum stay of 2 years in India immediately during the succeeding date of his or her arrival on transfer of residence. Here shortfall up to 2 months can be condoned by say AC or DC if early return is on account of what? Terminal or of profession contract, any other special circumstances for reasons to be recorded in writing. Principal commissioner or commissioner, they can what? Condone short visits up to 6 months in special circumstances for reasons to be recorded in writing. And passenger must not have availed this concession in preceding 3 years. No relaxation of condition. Then here return after stay abroad of 2 years or more. Return after stay abroad of 2 years or more. So basically here also, if a person is a tourist and he is returning after stay abroad of 2 years or more, then in that case he will be allowed personal and household articles other than those mentioned in Annexure 1, but including articles mentioned in Annexure 2, not more than 1 unit each, up to aggregate value of 750. Minimum stay of 2 years abroad immediately preceding the date of transfer of his or her arrival on residence. Here also shortfall up to 2 months can be condoned by AC or DC. Basically, if early return is on account of terminal leave or vacation being availed by the passenger. Now he is out of India, now he is coming to India. And they are what? Basically, these conditions are for in India. Your stay in India must be there. Here. For tourists, it is stay in India up to 12 months, stay in India up to 2 years or more than 2 years, that was there. So it was concessional allowance was for 150, 3 and 750. Now he is coming from abroad, more than 2 years stay out of India, he will be allowed articles other than those mentioned in Annexure 1, but including articles mentioned in Annexure 2 up to a value of rupees 750 each. Minimum stay of 2 years abroad immediately preceding the date of his arrival or transfer of residence. Here shortfall up to 2 months, they can be say condoned by AC or DC on terminal leave or vacation being availed by the passenger or any other special circumstances for the reasons to be recorded in writing. And total stay in India in short visits during the 2 preceding years should not exceed 6 months. For condition number 2, principal commissioner or commissioner, they may condone the delay in excess of 6 months and passenger must not have availed this concession in last preceding 3 years. There is no relaxation. Then personal and household articles mentioned in Annexure 1 may be brought on transfer of residence up to the above values, up to the values which have been mentioned in Appendix 1 and 2. And shortfall stay, where there is shortfall in stay in the prescribed stay duration of stay in India, the passenger shall without delay inform the principal commissioner, as the case may be, having jurisdiction over the customs station, where the duty-free allowance was allowed, and shall pay applicable duty along with interest. Then Annexure is what? Home theatre system, what you can bring air conditioner, 1 unit each. Microwave oven, washing machine, gas cooking range, personal computer, desktop computer, laptop and notepad. One is exempt and one can be accommodated in what? This allowance of transfer of residence. Domestic refrigerator, television, dishwasher, deep freezer, video camera with a combination or any of such video camera with one or more of the following goods, namely television receiver, sound recording or recording apparatus, video recording apparatus, vacuum cleaner, air fryer, dryer machine, air cooler, PlayStation or any other gaming console, water dispenser, oil heater, electric oven, musical instrument, tablets, example iPad, small Bluetooth speakers, air purifier, dehumidifier, multifunction printer, robotic vacuum cleaner, massage chair, projector, amplifier. So these articles can be brought by him on transfer of residence. Now here relating to currency, the import and export of currency. The import or export of currency under these rules shall be governed by in accordance with the Foreign Exchange Management Export Import Currency Regulations 2015 and the notification issued thereunder. Import of pets. So pets import by passenger, the same will be regulated by the rules notified by ministry or department of any authority of the central government. Now relating to unaccompanied baggage. So basically these rules, it will apply to what? Unaccompanied baggage unless otherwise excluded under these rules. So if they are specifically mentioning that this rule is applicable only in respect of baggage accompanying you, then it will be applicable for accompanied baggage only. So otherwise this rule will be applicable. If it's not mentioned, then it would be applicable for unaccompanied baggage also. So basically when the baggage will be regarded as unaccompanied baggage which is not accompanying you. However, the DC, the deputy commissioner or the assistant commissioner may allow unaccompanied baggage in the possession of passenger abroad and it is dispatched within 1 month of his arrival. So this unaccompanied baggage must be dispatched within 1 month of his arrival in India. So whenever he has arrived within 1 month, that baggage must be dispatched to get the benefit of these rules. The DC or AC, as a case may be, may allow unaccompanied baggage to land India up to 2 months before the arrival of passenger. It may so happen that they have shipped their baggage but they may not arrive by themselves because some travel disruptions or other conditions are there, passengers death, say illness, etc. Then this passenger has shipped his baggage that has arrived, that must be within 2 months before the arrival of passenger or within such period not exceeding 1 year. It may be before within 1 year also, for reasons to be recorded in writing. If he is satisfied that passenger was prevented from arriving in India within the period of 2 months due to circumstances beyond his control, such as sudden illness of the passenger or member of his family, or it may be there may be natural calamities, disrupt conditions, or a disruption of transport or travel arrangements in the country or country concerned, or for any other reasons which necessitated a change in the travel schedule of passenger. Now these rules basically, if the same would be applicable to crew members also, these rules shall apply to crew members engaged in foreign going conveyance for importation of their baggage at a time of final payoff on termination of their engagement. So these rules shall also apply to crew members engaged in foreign going conveyance for importation of their baggage at a time of final payoff on termination of their engagement. Then a crew member of a vessel or aircraft shall be allowed to bring articles like chocolates, cheese, cosmetics and other gift articles which are required for personal use or for family, not exceeding rupees 2500 in value. So these are our discussion relating to what? The baggage rules. These baggage rules have been framed in 2026. Now we'll be discussing some practical questions. So here Mr. B is an Indian resident, age 30 years, returned to India on 10th of April after visiting England. He has been on England on 1/4/2026. So he is a resident. He is returning India. On his bag, on his way back to India, he has brought personal effects like clothes, etc. So under Rule 3, you will be getting the benefit of this use personal effects. Duty free, this can be brought duty free. 1 liter of wine, this can be accommodated in up to 2 liters. General free allowance of Rule 5. 1 digital camera. 1 digital camera. This can also be accommodated in general free allowance. And mobile. This can also be accommodated in general free allowance. So basically, a resident arriving in India other than by land shall be allowed clearance free of duty articles other than those mentioned in Exhibit 1 up to a value of rupees 75,000 if they are carried on in person or bona fide accompanied baggage of the passenger. So personal effects like clothes, etc., that will be exempt under Rule 3. Then wine up to 2 liter can be accommodated in GFA. This 85,000 digital camera and mobiles can also be accommodated in GFA. GFA is 75,000. Remaining 80,000 will be liable to custom duty at rate of 35%. Now next is Mr. A is a person of Indian origin, age 40 years, came to India on tour along with her baby. The baby is infant. And she carried with her following goods. So one is we have seen passenger, resident, or for Indian tourists, person of Indian origin, Indian tourists, and one is foreigner who is residing in India. Their GFA was rupees 75,000. So now here he will be getting the general free allowance of 75,000. Personal effects that will be under Rule 3 will be exempt. Use personal effects of infant, that will also be getting the benefit under Rule 3. Here. Including an infant. One laptop will be exempt because he is 40 years of age. It's exempt under Rule 5. Travel souvenirs will be exempt under Rule 3. 1 liter of wine, it will be accommodated in general free allowance. 80,000 digital camera, mobile and digital camera, they will be accommodated in general free allowance. Cigars up to 25 can be accommodated in general free allowance. So, personal effects like clothes, etc., they are exempt. Personal effects of infant is exempt. Laptop is exempt. Travel souvenirs are exempt. Wine up to 2 liters can be accommodated in GFA. Mobile worth 80,000. It is worth 80,000. Digital camera worth rupees 75,000. And cigars 75,000 is the GFA. Okay. On balance, duty would be levied. Then Mr. Fang, or tourists of origin aged 22 years, came to India on tourist visa for a period of 1 month on 1/4/2026 with his wife aged 20 years and child Jing aged 2 years. He has brought the following items along with him. Personal effects of Mr. Fang valued 40,000 and Mrs. Fang valued 50,000 and Jing worth rupees 25,000. Okay, two laptop computers worth 36,000 each. Now, if separate declarations have been presented, then they will be getting the benefit here. One for Fang, one for Mrs. Fang. Laptop, one for Fang, one for Mrs. Fang. 3 bottles of wine, 1 liter each. 2 liters can be accommodated with Fang, and 1 liter can be accommodated with Mrs. Fang in general free allowance. Digital camera, Fang, mobile, Fang. Okay, it can be done this way to get the benefit of allowance. So personal effect is exempt if only one declaration is made. Then 1 laptop can be made exempt. 2 liters of wine and digital camera. General free allowance. Here personal effects, laptop, 1 liter and mobile. This way they can get. Child will be exempt. Now next is what? Mr. Ram. An Indian resident and engineer by profession was engaged in his profession in USA for 9 months, brought to him. It stays for 9 months. On 10/4/26, the following 4 items on his return to India. Use personal effects, that same will be exempt. Home theater system will be accommodated in allowance. Here the allowance will be up to 150 because from 3 months up to 12 months stay abroad, 150 can be brought other than those mentioned in Exo 1. Air conditioner, microwave oven, washing machine, gas cooking range, jewelry, it can be accommodated in general free allowance. And personal computer, this will be also coming under the ambit of general free allowance. So basically, use personal effects will be nil. This is 150, air conditioner 50, microwave oven 25, washing machine 40, gas cooking range 52, jewelry 75,000, personal 45,000, 447, general fee allowances 75,000 and 150. Balance articles will be liable to duty. So these are the baggage rules which we have discussed along with some illustrations. This printing mistake will be rectified. So these baggage rules are very, very important from examination point of view, and they will be definitely asked this time in examination. Now section, we are now discussing about the provisions relating to goods imported or exported by post or courier, that is about the postal goods and stores. So here section 83 is rate of duty and tariff valuation in respect of say goods imported or exported by post or courier. So rate of duty and tariff valuation in respect of goods which have been imported by post or courier. There is a date for determination of say rate of duty and tariff valuation. So the provisions relating to date for determination of rate of duty and tariff valuation in case of goods which have been imported by post or courier or exported by post or courier. So fundamentally, in case the goods have been imported by post, in case the goods have been say imported by post, if the goods have been say imported by post, then the rate of duty and tariff valuation. The rate of duty and tariff valuation will be applicable of the date when the postal authorities, present a list containing particulars of goods. The postal authority contains a list, presents a list containing particulars of goods to custom authority. For assessment purposes. So here, the provisions relating to date for determination of rate of duty and tariff valuation in case of goods imported or exported by post or courier. They will be what? Say, for goods which have been imported by post or courier, the rate of duty and tariff value, if any applicable to any goods imported by post or courier, shall be the rate and valuation. It is what? Imported by post or courier shall be the rate or valuation in force on the date on which the postal authorities or authorized officer, they present to the proper officer a list containing the particulars of such goods for the purpose of assessing the duty thereon. Now, in case the list has been presented before the arrival of the vessel, if the list has been presented before the arrival of the vessel, then what happens? It shall be deemed to be presented. On the date of arrival of such vessel. It shall be deemed to have been presented on the date of arrival of the vessel. So, the rate of duty and tariff value of any applicable to any goods imported by post or courier shall be the rate and value in force on the date on which the postal authorities or the authorized courier present what? To the proper officer list for the purpose of assessing the duty thereon. However, if goods are imported by vessel and the list was presented before the date of the arrival of the vessel, it shall be deemed to be presented, the same shall be deemed to be presented on the date of such arrival. It will be deemed to be presented on the date of arrival. Then for goods which are, say, exported by post or courier, when the exporter present the goods to the postal authority, for assessment purpose. So here, the rate of duty and tariff value, if any applicable to any goods exported by post or courier, shall be the rate and value in force. It will be the rate and value in force on the date on which the exporter delivers such goods to the postal authorities or the authorized courier. For, say, exportation. Delivers the goods to the postal authorities or authorized courier for exportation. Then here the CBIC, they may make the regulations for, the board may make regulations providing for what? The form and manner in which an entry may be made. In respect of goods imported or to be exported by post or courier. Form or manner in which the entry is to be made in respect of goods imported or exported by post or courier. Then the examination, assessment to duty and clearance of goods imported or to be exported by post or courier. It's the examination, assessment to duty and clearance for that purpose. Transit and transshipment of the goods which have been imported by post or courier from one custom station to another custom station in India or to a place, say, outside India. For this, separate regulations have been framed. So basically, for this, export or by post regulations have been framed, and here these regulations are known as export by post regulations. They will these regulations shall apply to export of goods by any person who is having a valid IEC which has been issued by Director General of Foreign Trade in furtherance of business from a foreign post office. And e-commerce basically means what? Buying and selling of the goods through internet on an e-commerce platform, the payment for which shall be done through various electronic means in accordance with the guidelines which have been issued by RBI from time to time. Now here they say that in case of goods to be exported by foreign post office, the entry will be required to be presented to the proper officer. They are the appraisers which are posted at foreign post office for clearance in Form 1. Then, what is the computation of duty on goods, say, imported by post? So, Measures XYZ Limited imported certain goods valuing 15 lakhs, assessable value from America by post. They are asking compute the duty payable by the importer in light of the following information. Now here, it is import. So what will be the date in case of import? When the postal authorities present the list containing particulars of goods to custom authority for assessment purpose. So here the date of presentation of list containing the particulars of goods to the proper officer is on 15/5. And rate of duty prevalent is 7.5%. But here in case the list has been presented prior to the arrival of the vessel, the list will be deemed to have been presented at the date of the arrival. So the same has been presented prior to the arrival of the vessel. It will be deemed to be presented on the date of the arrival. So in this case, the rate of duty will be 10%. So rate of duty applicable will be 10%. So AV is 15 lakh rupees. AV is 15 lakh rupees. Duty rate is say 11% of 15 lakh. That is 1 lakh and 65,000 rupees. It is 1 lakh and 65,000 rupees. Okay. Then on 15th of June, XYZ Limited delivered goods valuing 20 lakhs assessable value to postal authorities for export by post to Germany. The order for clearance of such goods for export was made on 29/6th. But the goods were actually being exported on 1st of July. Now here, in case of export by post, when the exporter presents the goods, delivers the goods, to postal authorities for assessment purpose, the rate of duty will be applicable of that date. So here the assessable value is 20 lakhs. Rate of duty will be 10% rate of duty applicable will be 10% because on 15th of June, the rate will be 10%. When the goods have been delivered, rate was 10%, which was subsequently raised to 15 and then 20. So 10% of 20 lakhs, 2 lakh rupees will be the duty, and no social welfare surcharge is levied on export duty. No social welfare surcharge is basically levied on, say, export duty. No SWS. Next is what about the stores? What stores is? Goods for use in a vessel or aircraft. Goods for use in vessel or aircraft is stores. Goods for use in vessel or aircraft is stores. So stores means what? Stores means goods for use in vessel or aircraft. Store means goods for use of vessel or aircraft, and it includes fuel and spare parts. And includes fuel and spare parts and other articles of equipment, whether or not for immediate fitting. So basically stores means what? Stores mean goods for use in vessel and or aircraft, and includes, say, fuel and spare parts and other articles of equipment, whether or not for immediate fitting. Now, section 85 is stores may be allowed to be warehoused without assessment of duty. Section 85 is stores may be, say, allowed to be warehoused without, say, assessment of duty. Now what happens is, say, if you have imported any goods which are to be supplied as stores to foreign going vessel or aircraft. If you have imported any goods which are to be supplied as stores to foreign going vessel or aircraft, then they will be allowed to be warehoused without assessment of import duty. So here the stores may be allowed to be, say, warehoused without assessment of duty. So if you are importing any goods and the same are to be supplied as stores to a foreign going vessel or aircraft, then they will be allowed to be warehoused without assessment of duty. So where any imported goods are entered for warehousing, an importer makes and subscribes to a declaration that goods are to be supplied as stores to vessel or aircraft without payment of import duty, then the proper officer may permit the goods to be warehoused without, say, being assessed to duty. So basically here what happens is stores list is prepared. Stores list is prepared. And in case the voyage of the vessel or aircraft, say, terminates in India, or say aircraft that terminates in India, then in this particular case, import duty will be levied. Otherwise, if the vessel or aircraft is a foreign going vessel or aircraft, it's foreign going vessel or aircraft, in that case, the goods may be allowed to be warehoused. The goods may be allowed to be warehoused to be supplied as foreign going vessel or aircraft as stores. Without assessment of duty, they can be kept in warehouse. The goods can be supplied to foreign going vessel or aircraft, that will be regarded as export. And the goods may remain on board of a foreign going vessel or aircraft without assessment. If that is coming from outside India and it's going out of India, then the goods may remain on board. And goods may be consumed in vessel or aircraft without assessment of duty. So fundamentally, when the voyage of the vessel terminates in India, then only the duty will be allowed. Duty will be levied. Then section 86 provides for what? Transit and transshipment of stores. So any stores imported in a vessel or aircraft, as I already told you, if it is a foreign going vessel or aircraft, then the imported stores may remain on board of a foreign going vessel or aircraft without payment of duty. That is transit. And they can be also transshipped also. without payment of duty. So any stores imported in a vessel or aircraft may, without payment of duty, remain on board of any vessel or aircraft while it is in India. Similarly, any stores imported in a vessel or aircraft may be transferred to any vessel or aircraft as stores for consumption therein with the permission of the proper officer. Then imported stores, they may be consumed on board of foreign going vessel or aircraft. So any imported stores on board of a foreign going vessel or aircraft other than stores meant for ship of an Indian Navy to which section 90 applies, they may be consumed thereon as stores without payment of duty. They can be consumed on board of foreign going vessel or aircraft without assessment of duty. Similarly, if any stores are taken on board of any foreign going vessel or aircraft as stores, then the same shall be regarded as export. It will be regarded as export, and duty drawback shall be allowed of the import duty so paid. However, in case of say fuel and lubricating oil, in case of fuel and lubricating oil, instead of 98%, 100% of the drawback will be admissible. So if you are supplying any goods to a foreign going vessel or aircraft, it will be regarded export and you will be allowed say duty drawback. Okay? You will be allowed say duty drawback. Then goods produced or manufactured in India, goods produced or manufactured in India and they are required as stores to a foreign going vessel or aircraft, the same may be exported. They may be exported free of duty. They may be exported free of duty in such quantities as the proper officer may determine having regard to the length of the voyage. How much is the vessel, aircraft, what is the length of voyage, journey, etc. So stores that will be free of export duty. And concessions in respect of imported stores for Navy. So the imported stores may without payment of duty. Imported stores may without payment of duty be consumed on board of the ship of Indian Navy. And stores taken on board of ship of Indian Navy will be treated as if they are exported out of India and they will be entitled drawback of 100%. So here similar provisions are there. So for this purpose stores means what? Stores for use of ship of an Indian Navy, or say stores supplied free by government for use of the crew of ship of Indian Navy in accordance with condition of their service. So these were the provisions which we have discussed about the stores. So this was all about the importation. Okay.